Just about.
perhaps there's an empty seat right in front of you, just so we make space for people that would come in later. Please, if there is an empty seat in front of you, may I please ask that you please kindly move forward a little bit. Thank you. Thank you very much. Thank you.
That was a beautiful rendition of the national anthem. God bless Nigeria. Thank you so much. So very quickly, we're going to be taking the safety protocols for this event. So can I kindly ask your attention as we take a few safety protocols. We have the entry. This door to my left is the entry door. And if you have any reason to step out of the hall briefly, that's the exit right behind you. If you want to use the ladies and the gents, you use the exit door behind. You take your left and then your left again. Is that clear? Thank you so much. Okay, so this event promises to be very engaging. We're going to be asking, we're going to have a question and answer session. So we ask that we please engage. Thank you so much.
Yes, one other thing. May I please ask that we be generous with our applause when we invite people upstage. Do we have a deal? Thank you very much. Again, let me officially welcome you all to this special strategic that have been tagged, the SME workshop that have been tagged on unlocking growth, leveraging capital market for SME sustainability and expansion. And this event has been put together by the Nigerian Exchange Limited and the Bank of Industry. My name is Ayomide Oguntoye, and with me is
Gloria Usman, Legal Division, Bank of Industry. Thank you so much once again for joining us. So like Ayomide has rightly said, today is not just about presentation, it's about perspective. You know, what will happen to SMEs when capital is within reach. That's what we're going to be discussing today. So we're talking leveraging capital markets for SME sustainability and expansion.
Thank you very much. Let me quickly run through a list of recognition just before we kick off the event proper. Joining us today is the Chief Executive Officer of Nigerian Exchange Limited, Mr. Jude Chiemeka. Please, a round of applause. Thank you. We got the assignment. Also joining us is Mr. Rotimi Akinde, the ED Corporate Finance and Investments. Thank you for joining us. Also joining us today is Otumba Francis Meshioye, OFR, the President, Manufacturers Association of Nigeria. Thank you so much for joining us today, sir.
Thank you so much, Ayomide. Also, we have Mr. Tony Ipeziako, the Head Primary Markets, Nigerian Exchange Limited. Thank you so much, Mr. Tony, for joining us today. We have Dr. Issa Amago. He's our Chief Strategy and Development Officer, Bank of Industry. Thank you, Doctor. A divisional head. Okay, apologies. Mr. Rotimi Akinde is our Executive Director, Corporate Finance and Investment. You have, oh, fantastic. Mr. Oluwatoyin Edu, our Executive Director, Risk Management and Business Development. Apologies, sir. Apologies, sir. Thank you so much. We have the Group Head product development and innovation is also with the business development group, Dr. Emmanuel Ojoro. He's here with us today. Thank you, Doctor, for joining us. We have our legal advisor, Bank of Industry, Iretiolua Damara Mrs. We have the company secretary of Bank of Industry, Mrs. Salami. She's also here with us today. Thank you so much, Ma, for joining us. Our project officers, other guests, gentlemen of the press, we welcome you to this beautiful event. Thank you so much.
Let me also welcome management and staff of NGX that are present here, please.
Okay, very quickly before we go into it, we have Mr. Ayo Bajamo. Apologies, I also just saw you here. We welcome you, sir, as our divisional head of Bank of Industry. Thank you so much, sir, for joining us. So we're going straight. We are going straight into the event proper. Let's make welcome again Mr. Obaro Osa, the Divisional Head, Business Development, Bank of Industry, for his welcome address. Thank you, Mr. Obaro.
Thank you very much for such a warm introduction. My job, very brief, is to welcome all of us to this session. Far back in 2022, we felt the need to have a very strong partnership with the Nigerian Stock Exchange. And engagements were initiated that culminated into signing an MOU in 2022. Mr. Ayo Bajomo played a major pivotal role in ensuring our relationship. And so what we are doing here today is an attempt to deepen that relationship, to expand it, to see what can be done for our customers across SMEs, large enterprises, to look at alternative ways of seeking funding for their businesses. So it's with great pleasure that I warmly welcome you all to this strategic workshop jointly organized by the Bank of Industry and the Nigerian Stock Exchange, NGX Limited, with the theme Unlocking Growth, Leveraging the Capital Market for SME Sustainability and Expansion. This event reflects our collective drive to build stronger, more resilient, medium-sized enterprises through enhanced access to capital, capacity building, and exposure to viable financing alternative beyond the conventional debt instruments as offered by Nigeria's financial institutions. Most entrepreneurs in Nigeria, if they need money, the first thing that strikes their mind is that they want to borrow. We are saying that it is good to think of borrowing, but there are also alternatives. And you must explore all alternatives in arriving at a better decision. So there are opportunities for you. You cannot have a business and own 100%, and the business is collapsing, and you're not thinking of shedding part of your equity to say, I want to hold 51%. Let people, younger people, smarter people own 49%. And the business can then outlive you. A lot of business in Nigeria, after the first generation, they die. Why did they die? Because the ship promoter, the person who has the idea, the person who has the vision, the man is no more. The woman is no more. The kids may not be interested. They've gone to school in America. They've gone to Canada. They don't want to come to Nigeria. So what happens to the business? The business collapses. So what we're trying to do here is an attempt to resolve that challenge. To say it is better to own 25% of a billion than 100% of 50 million. It is better to own 10% of a 20 billion business than 100% of a business that is struggling. So as we gather here today, we are creating a unique platform that not only fosters knowledge exchange, but also strengthens linkage between SMEs and the capital market, an increasingly critical channel for long-term business growth. This initiative is proud outcome of the MOU executed between the bank and Nigerian Stock Exchange in 2022, which has continually come through a shared commitment and strategic alignment to see how business in Nigeria can evolve. I would like to express our sincere appreciation to our management, because what we are doing here, if we don't have the approval, we will not be here. So I want to thank the MD, CEO of Bank of Industry, Dr. Olasupo Olusi, who is represented here by my ED, Mr. Rotimi Akinde, for the approval given to us for this program to kick off today. Because if we don't have that support, we will not be here. And we think that continuous provision of that support will help us in deepening our technical and financial relationship with NGX. So thank you, sir, for the support given to us. We honestly not take it for granted, and we hope to get more of this so that we can continue to work together to develop our country. I also want to thank Nigerian Stock Exchange, the CEO, Mr. Jude Shameka, and his team, who had worked tirelessly with our team in putting this together. Essentially, it takes two to tango. If we want to do something, and we're saying you are partners, and there's no cooperation, then nothing will be achieved. But immediately we initiated the process, they also saw they need to have this session. And the two teams were set up to work together, and they'll be working around the clock to put this together. So MD, sir, CEO of NGX, thank you, sir, for the opportunity to give it to us, and for agreeing to partner and co-sponsor this event with the Bank of Industry. To our speakers, panelists, and facilitators, we are grateful for your time and expertise. And to every participant here, whether MSME, large enterprises, operators, or general stakeholders, your presence is a testament to the growth and importance of this discussion and conversation going forward. I encourage all of us to get actively engaged, network meaningfully, and live here with actionable insights that can shape the next phase of collaborative partnership based on business evolution in Nigeria. Once again, I want to welcome all of us to this occasion, and let us unlock growth together. Thank you.
Thank you so much, Mr. Barrow Osa. Please keep the applause coming. A round of applause for him. Thank you very much. Very quickly, we would have the opening remarks from the NGX. We have Mr. Jude Shameka, our CEO, Nigerian Exchange Limited. Please, a round of applause for him.
Okay. Good morning, distinguished ladies and gentlemen. Please permit me to rely on the already established protocol. I just wanted to give off a call of opening remarks, but I can see that our host read out his opening remarks, and they say, "When you're in Rome, you behave like Romans." So I'm going to join him to give also a written opening remarks. But let me just start by thanking BOI for allowing the exchange to work with the exchange to host this event, which, like Mr. Barrow said, has been a long time coming. We're really appreciative of the MOU, and we believe that the government is doing a great work, especially utilizing BOI to finance some of our SMEs. And in the course of this program, we understand the details of the work and how SMEs can benefit substantially. Gentlemen, on behalf of the board and management of Nigerian Exchange Limited, it is indeed my pleasure to welcome you to this strategic session, a landmark event that signals the start of a transformative collaboration between the NGX and the Bank of Industry. This event underscores our shared commitment to deepening Nigeria's capital markets and creating new pathways for SME growth, visibility, sustainable financing, as well as enhancement in their jurisdictions. We are pleased to have you here as we engage in dialogue aimed at addressing persistent barriers to SME access to capital market funding. Through this engagement, we hope to co-create viable market-driven solutions that will unlock long-term capital, boost investor confidence, and position Nigeria SMEs for sustainable growth. Our partnership with the Bank of Industry is focused on expanding capital market access, enhancing financial literacy, and driving retail investor participation. By combining Bank of Industry's deep expertise in development finance with NGX's market infrastructure, we aim to equip SMEs with the tools, knowledge, and financing pathways they need to thrive. Nigeria's SME sector, comprising over 40 million businesses, and I'm glad that we have the chairman of MAN also here, accounts for 84% of total employment and contributes 46% to the GDP of the country. This sector remains critical to achieving the federal government's $1 trillion economy target by 2030. Despite its relevance, the sector remains undercapitalized with an estimated $32.2 billion funding gap, according to PwC, and limited access to formal financing. Capital market participation remains very low, with fewer than 1% of Nigerian SMEs leveraging the capital markets and exchange, compared to 3% in Kenya, 5% in South Africa, and 7% in Malaysia. As of Q4 2024, only 7 companies were listed on the NGX Group Board with a combined market capitalization of 106 billion naira. Rather than view this as a limitation, we see it as a remarkable opportunity, untapped frontier of expertise that, with the right structures and support, can be repositioned for formal investment, scalable growth, and institutional relevance. This is the spirit of engagement to unlock bold, actionable actions that will use an alternative financing mechanism. I encourage you to use an alternative financing mechanism. I encourage you to participate fully, ask informed questions, and view the capital market not just as a funding avenue, but as a strategic platform for long-term value creation and institutional legacy. We sincerely appreciate the steadfast partnership of the Bank of Industry and the collaboration of all stakeholders across the ecosystem. Together, we can build a more resilient and dynamic SME sector that will drive Nigeria's industrial transformation and economic diversification. In conclusion, I thank you all for being here today. Your presence and contributions are essential as we work together to shape a more inclusive and prosperous capital market. Let us make the most of this opportunity to spark ideas, forge partnerships, and create impact. Let me also use the opportunity to thank my colleagues at the NGX, led by Tony Beziako of the primary market, EVA, and the rest of the team for working with Mr. Barrow and his team as well. They've worked tirelessly to put this together. If you think about the logistics in Nigeria, it's never an easy thing. So I think they deserve a huge round of applause. Thank you very much.
we please give a round of applause to Mr. Jude Chiemeka for that wonderful opening remark. That was very beautiful, sir. Thank you so much. So he said it, we have market operators, we have financial advisors, and we have seasoned professionals that are here to speak to us today. Are we excited? Fantastic, thank you. Also, I want to thank Mr. Obaro for that welcome address. He said to us that it's better to have 10% of a small company than to have or to own 100% of a struggling company. Did we get that? Okay, that was good. Thank you, Mr. Obaro. Okay, so before we go to the next on our agenda, we would like to appreciate the presence of some other persons that haven't been recognized here today. We have Mr. Joseph Emunjeze, partner Udodoma Bello Sage. Please, a round of applause for Joseph Emunjeze. We also have in our presence Sam Chidoka, MD CEO, and Korea Advisory Services Limited. Can we please give a round of applause? Thank you so much, Mr. Sam Chidoka, for joining us today. We have Kendall, Mr. Kendall Anayi. He's joining online today, but let's acknowledge and appreciate him for joining us today. He's the Chief Executive Officer, Tizeti Network Limited. He's joining us virtually today. And then we have Fisayo Ogundare, she's Senior Manager, PwC. Thank you. Oh, hey, apologies. Fisayo Ogundare, Senior Manager, PwC, for joining us today. Okay, we'd also like to appreciate again the Executive Directors, Bank of Industry, for joining us today. Mr. Oluwaton Yedu, thank you so much for taking our time. Mr. Rotimi Akinde, thank you so much. Our Senior Management Staff, Bank of Industry, thank you. Management and staff of NGX, thank you for joining us today. Okay, apologies for the silence. I've just been informed that we have Verod Capital with us here today. So Verod Capital, thank you for joining us. We acknowledge your presence. Thank you so much. Thank you so much, sir. Okay, so next on our agenda, we have the opening remark by Mr. Rotimi Akinde, who's representing the MD CEO Bank of Industry today. So can we please put our hands together as we welcome Mr. Rotimi Akinde. He's our Executive Director, Bank of Industry, Corporate Finance.
Thank you very much. Well, distinguished guests, ladies and gentlemen, good morning. At the risk of sounding like a broken record, there is a clear commonality and consistency amongst all the participants, and it's been a pleasure for me to reconnect with some of my friends, Danladi and Sammy, who I've known for a long time, as well as Tony in the NGX, who I've known for a long time. I welcome you all to this important workshop jointly convened by the Bank of Industry and the Nigerian Exchange Limited, under the theme, Unlocking Growth, Leveraging the Capital Market for SME Sustainability and Expansion. This gathering is more than a meeting of minds. It is equally a clarion call, highlighting and harnessing the transformative power of the capital market in financing Nigeria's economic actors, especially the SMEs. The Bank of Industry's mission as Nigeria's leading development financial institution is clear, and it's simple. It is to catalyze inclusive, sustainable industrial growth. But beyond this, we see ourselves as a market shaper, where we mobilize capital, we build ecosystems, and also crowd in private capital investment, which is something that is very germane to the SMEs. The capital markets today offers one of the most powerful and underutilized channels to achieve this. enabling businesses to access long-term capital, improve upon governance, and build resilience against economic shocks and headwinds that we face in Nigeria. Equally, capital markets help us deliver diversification, which is something that Obaro spoke about, where we have a founder initiate a business, and over time we get to diversify shareholding. Equally, one of the things that the capital markets does is it fosters credibility, and it helps you deliver sustainability over the long term. Before I proceed into further details, I would allow me extend my hearty greetings and welcome to Mr. Jude Chiemeka, the Chief Executive Officer of the NGX, Otumba Francis Meshoye, the President of the Manufacturers Association of Nigeria, Dr. Chinyere Amona, FCA, Director General, Lagos Chamber of Commerce and Industry. I'm not sure that Mr. Charles Odi is here, the Director General of SMEDAN, Executive Management of Bank of Industry, and all staff present here. Globally, we find that SMEs play a very significant role in driving economic growth and in Nigeria, SMEs are very integral to promoting the country's GDP. That is why this workshop is very essential and critical to us, because one of the key things that we would have as a takeaway would be to raise an awareness on capital market opportunities, which I'm sure that imminently will be spoken about, whether it's on the equity side, on the debt side, on the hybrid side. And equally, it's going to help SMEs and corporates understand the requirements, benefits, and the pathways to market-based capital, because there are a plethora of ways that you can skin the cat in the capital markets. And we're going to be listening to people who are veterans who will share their ideas. Mr. Danladi Verhen, who's here, he's a PE guy. He's done a lot in the PE space, within the SME space. Sami has equally done a lot, and I'm sure that their insights would be very useful as we go along. For us in BOI, towards the latter part of last year, we developed what we call the 2025 to 2027 strategic plan. And part of that strategic plan was in recognition of the limitations that are imposed on a lot of financial institutions that continue to just embrace the traditional debt financing option. And so, as part of that plan, we've embedded into it some form of structured debt, blended instruments, guarantees, and equity participation tools that we can deploy to unlock capital, especially for the SMEs. Additionally, in BOI, we've recently just finalized our sustainability finance framework, which has equally been endorsed by an international second-party opinion provider. And so we're at the verge of going into the international markets to raise what we consider green, social, and sustainability-linked type of capital, with SMEs at the core who will be the main beneficiary of this sort of capital. So our knowledge sharing session with NGX collaboration in May was a foundational step. Today's workshop extends this effort to the broader enterprise ecosystem, helping founders move from a more informal to a more investment and structured readiness. We recognize that most of the challenges that SMEs face are not just a financial issue. Some of them transcend beyond financing to requiring some form of technical assistance, capacity development, and unlocking various ecosystems to help them thrive. In closing, I'd like to thank all our guests and contributors for the proposed insights that will be brought to bear. And to our customers, we also extend our heartfelt appreciation to you as we walk this journey from preparation to structuring and providing the needed access to the capital markets. I believe that together we can unlock growth, deepen impact, and build more resilient institutions. Thank you very much. My name is Rotimi Akinde, but I'm speaking on behalf of the CEO, Dr. Shukolusi.
So when do we have you speak on behalf of yourself?
When the occasion arises.
All right, thank you very much. Please, a round of applause for him one more time. Thank you very much, Mr. Akinde. Please let me also welcome Dr. Sonny Michael Omeza, a Director of Research and Advocacy at LCCI. He is representing, okay, very well, thank you very much. Please put your hands together for him. He is representing Dr. Chinyere Almona, the Director General at Lagos Chamber of Commerce. I would also like to recognize Mr. Akimboboye Akinola, a partner at Deloitte. Are you here? Oh, yes. Thank you very much for joining us. All right. So very quickly, may I please invite Otumba Francis Meshoye, OFR, President of Manufacturers Association of Nigeria, for his remarks. Please put your hands together.
I say very good morning to everyone, and particularly to the CEO of NGX, Mr. George Chemeka. Good morning. And BOI Chief Executives and representative for BOI, good morning to you all, and District Girl, good morning. I'm so happy to be here, and I was so glad. I wouldn't have loved to miss this. I was thinking when I got a call that you're really going to have a lot of inputs or thinking from the manufacturers, but nonetheless, within the very short time, we'll just make very short remarks. This is something we've been thinking about, and I'm really appreciative of the initiative to bring this together. Just like Mr. Barrow said, we got worried in the manufacturing sector. We see such like liver brothers, now Unilever, you have Heineken, you have Dunlop, you have all of them. You want to look at how many of that in Nigeria do we have. When we start the business, we are passionate, we are growing. What happens after that? In man, we are trying to see, okay, what do we do to ensure that even the small scale business or whatever it is called are coming up, we also scale them. But my intention is just to run through. I want to follow what have been laid down by my good brother here when Nobaro did some remarks, and my good brother Chemeka too said he will follow suit, and that suit has been followed. It's a nice suit, I can see everybody caught, so I'll just follow the same thing. I'll make it very brief. I clear that gap. You see, the capitalization is fine. We grew by about 7.6% last year, I think. And within that, we are wondering at our end that how many of these are really going to the SMEs? That's a problem. And the gap all over the world is wide. Our contribution, like you have just correctly said, 96% of SMEs and employment 80%, all these are there. But despite that, how do we concentrate on them? And the option that SMEs has had so far from their limited thinking is to go and borrow fund. And when they borrow fund, at what rate is it borrowed? Half information that it ranges between 36 to 48 from bank to bank if you want to lend to SMEs, majorly because of the risks they believe they have. CBN said our average lend is 27.6 or thereabout, but that is even we are number 6 of all in the whole world. We are number 6, rated number 6, most expensive. So if you have this, then what do we do? How do we move forward? I think that is the issue we want to look about. One thing, we have about 10 recommendations that we think we could really work upon, and I'll quickly just read that because of the time. And number one is that we should, as a nation, encourage starting from where SMEs now, because I'm looking at it that we can't just bring them onto stock exchanges immediately. we should try to be sure that our monetary policy is friendly, is recalibrated in a way that SME can benefit from it. BOI is trying a lot, I recognize that. But however, if the big manufacturers are complaining, despite the effort BOI, that we're having problems, what do you think the SMI will complain of? And my brother Barrow and the Edu and Co will agree with me. We say we want single digit. I know this is not easy to get. Single digit is not something we get so easily. Only few of us will get single digits, and only when you're getting the equipment. So when you get the equipment, what do? You have to run the business, correct? And you'll be sure that, you know what, go to this commercial bank. I'll make it practical. Commercial bank will tell you that, okay, do I need the BG? I can give you BG because I have the money in the first instance, so why can't you borrow from me? I said, how can I borrow from you? It's about 38%. I can't afford it. If I go to BOI, I say, okay, where's your BG? How do you get BG? You have collateral. But I'm just starting up, and I can't have that. And that you can get a single digit. It's going to be like 14, 15, 60%, I think, in the long run BOI. So that is something we need to look. So in the very short run, we have to look at how do we work on this. Number two, we need to understand very much. I don't need to say understand to the guru, but maybe in a way that we just rethink that, look, without capital, we can't do anything. You can't do anything. You need to grow. Even if you ask me to innovate, if I innovate, what do I do next? I need to grow. How do I expand? And so we need capital. We really need to be sure that this is very important. And long-term capital, indeed, is the key. Long-term capital. If you want me to take, for instance, District Chair, BOI, and my chief executive, if you say, let me plan for the next 5 years as a businessman, you know, I'm going to say, look, that's a far range, but let me do 12 months to see what's going to happen to the exchange rate, to see what is going to happen. So what if SMI, how will you plan for the next 3 years? It's very difficult. So there should be capital that is meant for SMI that will enable it to stabilize, steady, then grow from there. Then again, I want to mention that since capital goes to where it will generate profit, then while we are talking around there, we need to think about the environment that business operates. This environment is very harsh. If you give me money to go and do business, and I'm operating in a very harsh environment, my power, energy cost is high, I need to do some edgy job myself by having the nice road and the rest like that. For God's sake, this person is just going to expand, very small business, maybe whatever profit is having. So how will he take care of that? And mark you, more often time, it doesn't have that capability of efficiency that most of us in this room has. So in that case, it means that it's likely to really shut down if it's getting money and it's unable to really have a nice environment to operate. Then, while we are working on NGX to onboard them, we need to play with the government to look at the fiscal policy that will assist SMEs. It's nice to say, pay tax, do this. Thank God for the new reform, they have some exception. I think, in my mind, they should get better exception from that. If you can prove that you are doing your business consistently, and you can provide the records, I give you this incentive. Look, everybody wants to benefit from something. And also, if it is in the course of my real job, you are incentivizing me, I will do it. And what you do is that by the time I'm getting that benefit, you are encouraging other people to come on board, to come and join, correct? Because that is it. But if it's not getting satisfied, the local government is going to harass him. If it's just 25 million base, 25 million is not serious. It's good, but it's not something serious. If I pay half 50 million, so I need to pay taxes and so. I think we should look at that as well. And lastly, I'll just wrap this up because my CEO wants me, but can you do this in 5 minutes? So I'll wrap it up by saying that I had something, I forgot to spoke it, maybe the ED. There's something I've been thinking about, that is mentorship. When I was talking to people, we are saying that why don't you have manufacturers bank? We have been thinking about that. And I will link this up to it because it's not about giving the money. We should move away from giving the money to see that the money really does the work. So they need to be provided with that kind of technical capability. I think that's what was said. But I put it as a financial governance. Because BOI says, if you want to lend your money, you want to look at a governance structure, correct? You want to see the risk, that's my risk director. Abi, you want to be sure it is fine, okay. But SME doesn't have that. And that is why they can't come easily to you. That's why it cannot be onboarded at stock exchange. So maybe you want to find a way that, okay, don't worry, come in. You are so bad or you are so good. I will put a structure to you that must abide with. This structure will ensure that money is really generating profit. And the stakeholder, the shareholders rather, are getting benefits. Other stakeholders too are getting benefits. So in the summary, I take it that I want to thank NGX and BOI for thinking that we should have our own Adeoye & Co., Asans and Nigeria Limited, and whatever is Chukemeka PLC, we should have them. And I pray that this relationship, this collaboration will generate better than what I have just said. Thank you very much.
Thank you, Otumba Francis Meshoye, the President, Manufacturers Association of Nigeria, for that remarkable address on SME financing and capital market integration. Thank you so much, sir. So next, we have Dr. Sonny Michael Meza. He's the Director of Research and Advocacy, Lagos Chamber of Commerce and Industry. He's representing the Director General, LCCI. Can we please give a round of applause to Dr. Sonny Michael.
Thank you. Good morning, everyone. I'm representing the Director General, Lagos Chamber of Commerce and Industry, Dr. Mona. She will have been here, but for the change of time. I will continue from where from Manufacturers Association of Nigeria points, and to say that the issue of access to finance has been a problem that I came about 10 years ago. I joined the chamber, and today, access to finance is still an issue. So it's a good point to say that we have today two great institutions, Bank of Industry, NGX. I'm also calling us together to say, let's look deeper. Let's look out for alternatives. And I think that's where we truly should go. Please permit me, after recognizing my president, Manufacturers Association of Nigeria, thank you, sir, and the CEOs, chief executives from the two institutions, NGS and BOI. Please permit me to present the speech of the General. He said, I'm honored to stand before you today at this critical SME workshop jointly organized by the Nigerian Stock Exchange, Nigeria Exchange Limited, and Bank of Industry. Let me begin by expressing my sincere appreciation for this invitation and critical leadership both institutions continue to demonstrate in driving SME development in Nigeria through so many opportunities that we've been part of. The theme of today's event, Unlocking Growth, leveraging the capital market for SME growth, is quite timely and strategically vital. As we contend with global economic volatility, rising inflation, foreign exchange pressures, and high youth unemployment, sustaining and expanding our small and medium enterprises is not a theoretical debate. It is an economic necessity. SMEs are not peripheral players in our national development story. They are, in fact, the engine room of our economy. But for too long, like I said, I've been looking at this issue of access to finance for so many years now. SMEs have struggled to transition from survival to scale, from informal hustles to formal businesses, and from local champions to global players. One key reason for this stagnation is a lack of long-term sustainable access to capital. Today, I intend to speak directly to this problem by outlining the current state of the SME sector in Nigeria, diagnosing the core financing and structural gaps they face, exploring the largely untapped potential of the Nigerian capital market, and learning from international case studies, and also offering concrete data-driven strategies to unlock growth, just as we know is the reason why we gather here today. The Nigerian SMEs ecosystem is vast and fundamentally strategic to our economic future. According to a national survey on SMEs done by SMEDAN and the National Bureau of Statistics, we have about 40 million SMEs, most of which are micro enterprises. Still, a growing percentage operate within the small and medium categories. These businesses account for approximately 48% of Nigeria's GDP, contribute 7.3% export earnings, and provide 84% of total employment. SMEs in Nigeria face a borrowing rate of a maximum interest rates ranging from between 30 to 40% per annum, often collateralized against fixed assets that many do not have. According to a 2024 MSME competitiveness survey by Fate Foundation, nearly 60% of SMEs cite access to finance as number one barrier to growth. The reality is apparent. While our SMEs are rich in ideas, energy, and resilience, they are severely capital constrained, structurally unsupported, and excluded from scale-enabling financial systems. This is where the capital market, particularly structured equity and debt instruments, should come in as a sustainable solution and alternative. We're happy to be part of this conversation today towards that realization. While commercial banks and informal lenders currently dominate SME finance in Nigeria, the reality is that they are not structurally designed to support long-term growth. Commercial banks are inherently risk-averse, heavily collateral-driven, and generally oriented towards short-term loans, working capital, or asset financing. As a result, most Nigerian SMEs, especially early-stage and growth-oriented ones, remain locked out. What's more frustrating is that at the same time, we have a robust and well-patronized capital market. I think that's the good news we should celebrate today, that we know we have an alternative that we can leverage on, and that's what we're talking about today. To tell about how robust this stock market is, I said according to the Securities and Exchange Commission, listed companies on the Nigerian Stock Exchange declared about 1.1 trillion in dividends to shareholders in 2024. This reflects improved market confidence and investor returns. Between January and December 2024, the Commission approved a total of 3.68 trillion in new issues. This comprised about 59.8 billion in fixed income issuances and 3.62 trillion in equities, reflecting strong investor appetite and issuer confidence in equity segment of the market. And I think that this should give us a lot of encouragement to say when we truly are able to onboard these SMEs, like the president of MAN said, that there's some other work that need to be done to prepare the SMEs, because we may not just be able to pack them unstructured the way they are and take them to investors. Then I will just jump to the recommendations that my DG made because of time. I'll just jump to the 5 recommendations because I also saw the recommendations made by the president of MAN just now. He said we must revitalize the NGX Growth Board by introducing tiered listing regimes that accommodate SMEs at various growth stages. This should include reduced listing fees, flexible governance tiers, and regulatory sandboxes for innovative companies, SMEs. The Bank of Industry must evolve from a lender of last resort to a market enabler even up to the point of underwriting SME public offerings, issuing SME-specific credit enhancement guarantees, and co-investing with institutional investors in SME-dedicated funds. 3, we need to build SME financial readiness and governance capacity. This includes rolling out a national SME capital market readiness program, subsidizing audits and financial statements, and deploying SME advisory panels to help navigate disclosure, reporting, and investor relations by SMEs. Number 4, as I round up, we must incentivize private capital to flow into SME space. This could take the form of tax credits, and I think that was mentioned earlier, for investing in SME equities or bonds, creating SME-focused exchange-traded funds, ETFs, and mandating pension fund administrators to also allocate a defined portion of their portfolio to NGX Growth Board instruments. Finally, number 5, we need policy and legislative alignment. Government procurement should prioritize listed SMEs, and a dedicated SME Capital Market Access Act can codify incentives, protections, and long-term mandates. The market is ready. The tools exist. The time is now. Let us align around this shared vision as shareholders, stakeholders, regulators, policymakers, financiers, and founders. I commend the NGX and BOI for convening this dialogue and urge that we translate the insights from today's workshop into measurable action over the next 6 to 12 months. Let us establish targets, timelines, and tracking mechanism. Let us tell a new story about Nigerian SMEs, not struggle and survival, but scale and sustainability and success. Together, we can unlock growth. Together, we can deepen inclusion. Together, we can make the capital market work for every entrepreneur in Nigeria. Thank you, and I look forward to continuing the conversation even in the breakout sessions and beyond. This is Dr. Sonny Omeza Michael, and I just spoke for Dr. Chinyere Armona, Director General, Lagos Chamber of Commerce and Industry. Thank you. Good morning.
Thank you so much, Dr. Sonny. Indeed, together we can all unlock growth. That's Director, Research and Advocacy, LCCI, who has just spoken, on behalf of the Director General, LCCI. Thank you once again, Dr. Sonny Michael, for that profound address. Okay, so next up we have a visionary leader and a seasoned professional in banking. He's going to be taking his presentation on a BOI 2025 to 2027 strategic plan, alternative financing model for SMEs. He's our Chief Strategy and Development Officer, Bank of Industry. So let's make welcome Dr. Issa Omago, Chief Strategy.
Good morning, everyone. On the program I have, it says 11:40, no, 10:40 to 11:10. That means I have 30 minutes. I'm going to spare us a couple of minutes because I'm very busy here, so I'm sure I want to be able to have time to do other things. But essentially, I would like to welcome you to this workshop, and it's a privilege to be able to host it in connection with NGX. Jude, I'm happy that the thing has finally come to pass. But what we have done in the last couple of months, I've gotten board approval for, is to try to come up with some strategy that we believe can move the bank to a different level with respect to the way we intervene in the market. If you look at the market landscape, the financial landscape. Thank you. If you look at the financial lines, that one was okay now, madam. Just to be two here. If you look at the financial landscape, what you typically find out is that there are issues around risk and cost recovery. On the extreme left, you have the public sector, where you have government that produces public goods or that finances public goods. Typically, the risks are high. There's very poor recovery. On the extreme right, you have the private sector where you will see the commercial banks playing and other what we refer to as commercial hawks in our environment. Those ones are very focused on minimizing risk and exploiting the best possible cost recovery. Where we come in as a development finance institution is to be able to bridge that gap where there's market failure, where it exists. And we bring the funding to be able to ensure that where government cannot do, we do. What the commercial banks cannot do, we do. So, I mean, the earlier speakers have spoken to that fact, the fact that we have to intervene in this space. So creativity becomes very critical. So our 3-year strategy that was approved by the board in November last year is basically targeted at trying to ensure that we truly deploy every naira to where it matters most in a way that ultimately impact can be achieved. So beyond financial performance, I think what we're now more focused on is impact of every naira that we deploy. And we'd rather deploy the money and ensure that Nigeria benefits more than even BOI benefits. And so our focus has kind of shifted a bit. We've done about 6 months already of the strategy. It's 2025, 2027, so we're really running out of time. Our objective as a division is to ensure that in 2.5 years, we'll have a favorable variance of 6 months before we begin to move. Okay, having said that preamble, I'll just basically show you our strategy house. We have an ambition, and if you look at the our ambition is village people that are trying to do it, but it's okay. We'll overcome. We'll always overcome. So it's to spearhead Nigeria's sustainable and inclusive development. Very importantly, by coming up with tailored products that can help us to serve underserved and high impact areas. And SMEs typically are very underserved, and has been alluded to earlier, many submissions in areas of access to finance, access to market, and very importantly, issues around even formalization. And so our focus is to ensure that we come up with products. And I also heard about co-creation. So working with NGX, for example, working with the likes of Danladi and areas where we can begin to think of how to work together to come up with solutions that can truly help us achieve our objective. That's our ambition, and we're very focused on achieving it. So we built a house. This is a summary of our journey for the next 2.5 years. At the roof of the house, we have the ambition, which I've already spoken to, which correlates to a reasonable extent with the theme of this workshop. And at the intern level, ultimately, we are trying to measure outcomes. And the outcomes have to do with job creation, import substitution, export promotion, and ultimately industrialization. I mean, the argument about sometimes when you're doing economics is they tell you what is between development and growth. So we say we're unlocking growth to achieve sustainability. In our ambition, we also want to be able to ensure that we come up with solutions that can help us to help Nigeria develop industrially. But I think development is more critical than growth. So Nigeria is growing at 3.4%. Who will help? I mean, really. How does it truly affect the SMEs that we're supposed to be working with? So we want to, in BOI, begin to really focus on impact measurement, and those items that we have on the lintel level, basically what we're going to be focused on in terms of this. So we recently developed a development impact framework, and the ultimate objective is beyond money, what is that money doing that is being deployed? So to also put some level of context to it, every time you come to us to ask for a naira, we're asking you, that naira you're coming for, is it going to help women businesses? Is it going to help MSMEs? Is it going to drive youth engagement? Will there be some impact on infrastructure? How does it help digital economy? And after all said and done, how do we save the future of our children from a climate action perspective? And so that the 6 thematic areas that we also try to use as a basis to assess money we're giving to you in conjunction with the outcomes, which are job creation, import substitution, industrialization, and finally, export promotion. Now, every house you build must have a pillar, or must have pillars. And it is these pillars I will now speak to. Now, every of the things that I've put in this house, there are about 18 initiatives, and we're measuring them on a go, on a regular basis. So you have 4 pillars. On the extreme right, talk about how do we diversify our capital base. And so we'll probably be talking to the likes of Danladi & Co. and our partners offshore to see how we can raise money to drive business locally. We also want to be able to ensure that we digitalize our offerings. So it's one of the pillars that we're very focused on. And technology becomes very critical. And we try to focus on impact. I've already said that. But I'm going to extract the second one, which is basically expanding our value proposition. And that is what's going to make me to speak to the issue of alternative financing that I'm supposed to be speaking about this morning. We want to expand our value proposition. How do we do that? But before we get to looking at some of those details, if you look at the base of our house, the foundation, I used to be in commercial banking, and I used to do a lot of funding for industries. Sometimes when we go to like the Agbara or Tao, those places, we're looking at factories that are just about coming up. If you know the depth that you have to go to build foundations for some kind of equipment, you'll be amazed. Sometimes up to 3 floors. And a lot of money goes in there. So foundation is very critical. So at the base of our house, there are 3 things that are enabling our intent. One of them is the need to build internal capabilities. If you understand resource-based view, one of those theories, you realize that it's important that after all this English, people need to be able to get the work done. And so if you fix the people, you fix the business. So we need to fix internal capabilities within the bank to be able to ensure that we can deploy the money to achieve our ambition. Then you cannot truly do much without, these days, technology to digitize processes and make things a whole lot faster and more efficient. But I think what is critical at this point is what we're having this conversation here between BOI and NGX. And if you see, it's really the base of our house, partnership and collaboration. Collaboration across policy, advocacy, because somebody mentioned, I think it was the DG that mentioned, chief that mentioned monetary policy issues. So BOI has convening capability. We're a policy bank. So beyond raising money to support SMEs and high impact sectors, we also are very involved in working with government officials to try and influence policy. Because we are able to harvest comments from the market, take it to the guys in government in Abuja, and hopefully influence policy outcomes. So this is the basis of our being here today: partnership and collaboration, partnership and collaboration, partnership and collaboration. And by the way, it's an initiative in our 18 in this and that one I'm in charge of it. So I'm very focused on when there are delays and people don't respond on time, even to emails. Yeah, so I've already said I'm extracting this particular pillar, and I'm going to speak with respect to what it is that we're trying to achieve in the bank under corporate strategy. I mean, basically work across the entire economy. We do micro enterprises, we do MSMEs, and we do large enterprises. Until about 8 months ago, I was the general manager in large enterprises in this bank. So I have an idea of the pain points of most of these customers that are dealt with, and who I used to deal with on commercial banking. So we're in a very familiar space. If you look at it from a funnel approach, I mean, there's a lot of challenges with respect to global MSME financing. There are gaps. The amount of funding that's available for MSMEs is probably 60% of what they need. And if you now go to sub-Saharan Africa, you probably have a gap of around 229 billion US dollars. That's a significant amount of money that is left to be provided for MSMEs to truly scale, unlocking growth in order for us to do that. And there are various ways of achieving our objective. In Nigeria, the gap is about 13 trillion naira. According to PwC's MSME survey that happened in 2024, 13 trillion. What even makes it more complicated is that CBN has now removed their hands from doing intervening in the development finance space. So it's an opportunity for us as BOI and other DFIs, if they rise up to the occasion, to truly begin to make a difference. And to do that, again, go back to our foundation: people, expanding value proposition, getting the right level of capital to be able to truly deploy and create the impact that is required for this country to make forward. I mean, there's too much talking. I mean, I attend too many panel sessions, attend too many seminars, and honestly, I'm tired. Can we begin to, at individual levels, truly make a difference by the way we work? Now, there are all sort of ways of raising money by SMEs, MSMEs, family and friends. Even I, at a point, I was 18 months, I was in the street hustling. I think somebody used hustle earlier on, so I know what it means to raise money. Even your friends will not stop taking your call. You know, so how can we now eventually try as a BOI or as a capital market to create the enabling environment for people to have access to funding in a way they can do business very diligently without all the frustration that comes from trying to raise money? we're very familiar with the ways that people look for money, traditional methods, working capital finance, all this thing. But you see, even the financial architecture of Nigeria is too weak and too shallow. So when you expect commercial banks to give you money, how can they give you money when they're getting deposits that you and I are giving to them, for those of us that have money to give them money? And you want your money back in 90 days. I want to borrow money that will last 7 years. It's not possible. So there's a major mismatch. And so a weak financial architecture cannot support MSME growth. And that's why this kind of thing we're having becomes very critical. How can we work together to raise patient capital that can be there for a longer period? And then we can come in intermittently to deploy some debt to leverage the equity and ensure that we get the best possible returns on equity. And if you look at the way capital structures are designed, when you start with 100% equity and begin to introduce debt, there's a level you get to where the return on equity is the highest. And that will be your optimal capital structure. So yes, you need some debt, but sometimes equity is what you need to be able to start the whole process. And this is where these conventions are becoming very critical. So in terms of alternative financing models, what we try to do is to look at various ways, venture capital and private equity. I was looking to Dana earlier on. When I was in GT Bank, there was time liquidity was very tight in the market. We were afraid of systemic challenges because some banks were very weak. So we didn't want to now start giving money to our customers. And so we're very careful about how we fund transactions, because sometimes the customers take money from your own bank that is very strong and take it to a weaker bank. And then before this happening, the whole place collapses on your roof. So I started going to PE firms because there were customers who had good management. They had, but they are challenged with respect to a capital. But debt was no longer going after them because they didn't trust that the money will not go into the drain. So I went to the likes of Danladi and all this. I even started working with UBO, who were working with a lot of PE firms to try to see how we can attract PE monies into firms that we believe were bankable but were challenged at that point in time. And when the debt got in, we were ultimately able to give them debt to leverage the equity. So those creative things need to begin to happen again. So there's crowdfunding, there's venture capital, like I said, we have weak financial architecture, so we don't even have enough people doing PE. So there's opportunities for people to go into that space as well. And then, of course, there are issues around forfeiting or factoring or invoice discounting. Those are very easy ways to try to ensure that I give people money. But for that to happen, performance has to happen first. And again, issue of credibility also comes in. And that's why in banking, talk about 5 C's. For me, the most critical one is character. Some of these mechanisms are very esoteric and very sexy, excuse my French. Now, what typically happens is we don't even have enough business technology yet to do some of these initiatives. But in developed economies, there are ways that they're also raising money to tokenize the assets that they have. And those assets cannot be used to support working capital. But there's nothing wrong with trying to begin to think of it. Recently, I saw something on LinkedIn where IFC come up with what they call digital native bonds. And I'm saying, what can we try to Nigeria here? There's so much to do, but it's people and capital in order for us to intervene in that market failure space when you look at the financial landscape. So in more specific terms, given one of the 4 pillars that I showed in our strategy house, we'll try to link how we intend to achieve that value provision expansion to the possible financing mechanisms that are there in the market. And I said, expand value proposition. What is the element in our strategy house? We want to be able to offer no or low collateral loans to MSMEs. It's very desirable. I hear of single digit a lot. 2, we want to provide project finance and guarantees for large-scale infrastructure. The ED, Rotimi Akinde and his team are doing a whole lot in that space with Ayo Bajomo, who is the divisional head for corporate finance and investment. There's so much happening in that space. And in the next couple of months, you'll hear things that are going to be launched. I don't know if Rotimi mentioned BOI Impact Fund, which is going to be dealing with equity products and also products for restructuring when customers are having challenges. If you look at our offering as a bank, one of the things we say is we support expansion, we support startups, establishment of startups, expansion, modernization, and even rehabilitation. And so that product makes a lot of sense because if you have a fund that is going to take care of businesses that are failing, they truly are living or walking your talk in terms of what you're offering to the whole world. We also want to be able to, direct or indirect equity so that we can achieve unlock growth of MSMEs. And a lot of creativity or co-creation is going to happen working with the likes of NGX and our colleagues who are in the venture capital and PE space. After all said and done, I'm sure many of you have relatives who come to you and say, I want to start business. I said, okay. And I said, so how much do you need? He said, any amount. That seems to annoy me. What does any amount mean? I mean, you haven't even thought of the business, say any amount. Clearly, that money is going to go into a hole. And I get really upset. So I was in a village meeting yesterday, somewhere in Ikori. And then, those of us came again and I said, what's going on here? Can't we ever learn? So we now use village meeting sessions to try and do formal advisory, to try to teach them how to do business. It is critical that we invest a lot of effort, energy, and money in capacity building, technical support, and a lot of guiding these guys. So, population, so 40 million MSMEs, how many of them are truly even ready to even collect money from their family and friends? When they say any amount is what they want. What does any amount mean? So we need to begin to discipline our people that we meet on a daily basis, even in our village meetings. So they can begin to learn and begin to formalize their businesses. So to match some of these things that we've said in our second pillar, we want to be able to now start looking at revenue-based financing, peer-to-peer lending, crowdfunding. And one of the easiest ways to do that is provide a digital platform. And because we're a trusted and credible partner, people can ensure that if they put money on that platform, that money will be used effectively. And that's why, for example, we do manage funding and match funding with state governments and other NGOs because we're a trusted and credible partner. And in our own case, we're a government bank that is running like a private sector and we're doing well, even if I'm behaving like a lizard. And then you go to the next one, we'll talk about project finance. So recently, this bank, under the guidance of the current MD, worked with the federal government and set up a national credit guarantee this thing. So those are the ways to create, sometimes not directly, but indirectly use that convening capability to influence outcomes. So Nigerian credit, this is coming up very soon, and it can help us to be able to minimize the challenges that MSMEs face in trying to raise funding. Venture capital, I don't want to talk much because the experts are here. And again, I've already mentioned about digital platforms for us to ensure businesses get access to capital, even access to market, and ultimately be able to scale. Thank you. Am I to take any question?
Is it just one?
Thank you, Dr. Issa Omagu. That was wonderful. So we'll be taking questions and answers very quickly. If you have questions for Doctor, can we please have our questions so he can respond very quickly before we move on to the next session? I'll just come to you with a show of hands. Okay, great. There's someone right there. Okay. Doctor spoke extensively on why we're here today. Okay, I believe, we have one hand here. Please, can you give the mic to him? Thank you.
Thank you so much for such a wonderful presentation. My name is Noah. I work with a fintech. We provide financial infrastructure. So I wanted to ask, is BOI and NGX open to private financial infrastructure providers where you gather SMEs and say, hey, we have some partners who can give you some of the digital tools that you need, maybe agency banking, apps, or any of these things that will help their processes, give them the ability to scale so that they won't spend so much of the money you are giving them on infrastructure that is not, that is very expensive. So you have like a partnership with private financial tools providers. So they come, you have a conference like this, they present all their tools, and then you can connect SMEs to those providers.
Okay, thank you for your question. They're asking BOI and NGX, so I don't know what I'm supposed to present at this point. I think essentially what we're doing in this particular forum is to be able to come together and, like I said at the beginning of my presentation, that we're very focused on partnership and collaboration. So this kind of a workshop gives us the opportunity to meet together and brainstorm, judge, and co-create solutions. So I also mentioned, I don't know if you remember, that we are trying to see whether we can create a platform, digital platform, because we are very credible, very quick. Imagine by the time you now look at NGX and BOI together, having a platform that people can access capital, also from there they can access market. So you've thrown the matter up. The CEO, MD-CEO here, the ED that is in charge of this whole transaction is here. So I guess we're harvesting comments, and I believe that some of these things can be taken on board in the way that we progress our collaboration going into the new season. Yes, so it's a possibility. And by the way, I used to work in Unified Payments. I was Director of Marketing and Sales. So I'm very familiar with that fintech space. And we already had, we had the products that people used to use to switch, and we used to bring people on board, merchants, and then get merchants to transact with them, individuals. So they already exist. I think just that there are too many in silos. So we need a very central digital platform that can help us to be able to work with our customers and also grow the SME space. In Digital Bank, sorry, I keep going back, I was there for a long time. We have what we call SME Market Hub. So because the SMEs don't have the money to create their own internet platforms, we will onboard you onto the onto the bank's platform, and then people come to that platform and buy your stuff. So we're creating two things: getting data, and data is the new oil, new collateral on those MSMEs and their businesses. So sometimes you don't need to have collateral to now, because you already have data on that customer's cash flows over time coming to your platform. And so not only are you creating a platform for the customer to have access to market, you're also gathering data that can help you to give customer loan, because you have visibility of the customer's transactions. It exists. We need to be more deliberate, intentional about how we do it. And I think that this conversation we're having with NGX may be a good starting point in order for us to truly, in terms of one of our strategies, to optimize delivery channel. That channel, which is going to be digitized, is what we're going to use to create this kind of thing you're asking for. Yes, so we already have that kind of potential. Not only the thinking in our strategy, but the collaboration with NGX. And you are technology, so who knows, you may become one of the vendors. You're already trying to market yourself.
All right, so I think we can take one last question. We have, okay, yes, she raised her hand first.
Thank you very much, everyone. My name is Brafiat Onitirin, a financial inclusion expert. I want to take you back to your statement of any amount. At the village meeting, what was your response to your people, your kindred, how to go about it? I know for your position, you cannot handle that at your status. As your BDSP partner, I don't mind you handing them over to me. Let us now go back to basics and to set up the foundation. Thank you.
Okay, so let's load the questions together. Let's take one last question and then you answer together. Here, Vivian here.
Thank you so much, Dr. Issa, for the insightful presentation. My name is Chinelo. I work for Main Street Capital. I think it's very interesting that BOI is going to launch an impact fund. I was listening to hear more about it, but you didn't really say much. I want to know when we should expect it, and would BOI be deploying the funds directly to customers, or are they going to leverage financial institutions? Thank you.
Yeah, we can have responses to questions.
Thank you. So some of these questions are above my pay grade. Even if I have the answer, I will not say it. So I'll start from the impact fund part. I know that it's something that we wanted to do since like yesterday, because if we're going to truly achieve our 3-year corporate strategy, and which, by the way, 6 months have gone, we need those products to help us be able to quickly move. So I think that if it hasn't been, I don't think it has been launched yet, but anywhere from now, it will be launched. Now, our approach to delivering solutions to the market is multi-pronged. There are situations where we approach the market directly, even in the way we do our current model. But also, if you notice, again, this issue of partnership and collaboration. If I show the strategy house, you see where we say we want to work with people like you, people like the people in government. So the model is multi-pronged, and we'll do, in some cases, intervene directly. In some cases, we'll work with BDSPs, work with your firms to deliver those solutions, including microfinance institutions and other PFIs that are going to be participating in our intervention. We don't have any, there's a limit. You can't really go very far if you go alone. So going with our partners is critical. And that's why at the base of our strategy house is partnership and collaboration across all sectors. And we're also very willing to truly co-create solutions on the go. So please bring them on. If you have any issue in the bank, just send a mail to me. I will follow this thing up. So village meeting. So BDSP. No, but you're right. So we try to speak, but not as deep as we should, because like you said, so I think it's something I can take on board and say, truly, maybe next meeting I will invite one BDSP to come and talk to them. That may be my own CSR, even if I give you an honorarium. Thank you.
Thank you very much, sir. Please a round of applause for Dr. Issa Omago. He has spoken to alternative financing model for SMEs. Next, we've heard from the BOI side, and next we'll hear from the NGX side. Please make welcome with me Mr. Tony Ibeziako as he speaks to unlocking SME growth through capital market. Please keep the applause coming. Thank you.
Okay. Good afternoon, everyone. Allow me to stand on existing protocol. I've been tasked with presenting, having an NGX presentation which is titled Unlocking SME Growth Through the Nigerian Capital Market. Next slide. By the time I'm done with this presentation, I hope that I will be able to give an overview of the SME ecosystem, unlocking opportunities through the collaboration, partnership, and the capital market. Overview of the Nigerian capital market. We don't want to take it for granted that everybody here knows what the structure of the capital market is. Then we'll talk about the growth board as a catalyst for SME growth. We'll talk about leveraging the capital markets by talking about our value proposition and call to action. So what we want to highlight with our presentation is to make participants take away a few things from here. The first thing will be highlight the role of the capital market in enhancing MSA growth. Two is to address the challenges from our own lens, the way we see it in accessing capital market and propose solutions. The next one will be highlight the benefits of listing on the NGX, which I'm sure a lot of founders is here and eagerly waiting for. And last but not the least, provide a roadmap for SMEs seeking to access the Nigerian capital market. Next slide. So a lot has been said already about the overview of the Nigerian SME space, what it contributes to GDP, employment, innovation and economic growth. But we just wanted to hunker it down to maybe 3 salient points. Contribution to the economy. Nigeria has over about 40 million SMEs that contributes about 50% to GDP and 80% of employment. The next one is support and initiatives, government initiatives through SMEs, who is not here, LCCI, MAN. We want to be able to put a platform where the public sector and the private sector gravitates together to help SMEs. So we also be looking at things like Tony Elumelu Foundation and emerging opportunities. We can't take away the fact that these days fintech is the new oil. Behind fintech is data, and it has other products, structured products that SMEs can latch onto. You've heard things like tokenization, crowdfunding. So we want to be able to look at the whole universe
of new emerging opportunities and not be fixated on traditional type of financing for SMEs. Next slide. Sorry, go back. Okay, next slide. So we wanted to, throw out a few data and make a very salient point. For this collaboration with BOI, people have different definitions of what SMEs are. But we wanted to look at it from the lens of how BOI looks at it. And from that lens, SMEs are stratified into 3 sectors. Micro enterprise, small enterprise, medium to large enterprise. Now, for this engagement, we want to be a bit more strategic to focus on some element of small enterprise, who are people that have 10 to 15 employees, total asset of 5 to 100 million and annual turnover of about 100 million. But the bulk of what we are interested in is in medium to large. And if you look at it, you're looking at employment scale of 51 to 200, total asset of 100 to 500, and annual turnover of about 500 million. The reason for that is even if SMEs are looking to access public capital, there needs to be scalability, there needs to be governance, there needs to be profitability, and we wouldn't be able to concentrate on a 10-man business for them to come to the capital market and take money from people, because it has its own responsibility as well. To the women here, and there's quite a number of women here, women actually have a large chunk of MSME businesses in Nigeria, and we also want to encourage that to continue. As the presentation goes on, you would see where we think that the smaller companies, we can be able to help them through capacity building, but they wouldn't be in a position to access capital from the market as they were today. Next slide. So the typical challenges of the ecosystem is access to finance. 60% of SMEs go under within their first 3 to 5 years. And the reason for that is they don't have access to credit. Even if when they have access to credit, the high cost of credit, and they don't have the collateral to access those credits. Regulatory and administrative hurdle. Regulation, both direct and indirect, can be very high and difficult. You can imagine a firm that wants to access the public capital market and you tell him that he needs to have an independent director. The owner will tell you, I don't know what you're talking about in terms of governance. Who is going to pay for that? So there's the regulatory hurdle. We've talked about, in different shapes or form, infrastructure deficiencies, and this is where, scalability, co-creation, and ability of the government to intervene in providing the necessary infrastructure, be it power, be it road. You don't want the tomato seller to scale and he's not able to transport his tomato to the market, and 60% of it gets rotten. Informality of most SMEs, they are mostly unstructured. And in that perspective, we have our X Academy, I won't go into it now, where we take these companies and actually hold them and improve governance, include reporting, improve disclosures. You'll be shocked that some of the meetings we go to, you see SMEs that are doing over ₦1 billion still using GAAP in their financing books. So X Academy will solve that problem, and that leads to skills gap. They will tell you it's one thing to run a company, and it's one thing for the company, the founders of the company, to understand transgenerational transfer of wealth, to understand basic accounting principles, to understand governance. So even the soft skills, to stand up here and talk, a CEO should be able to do those soft skills. So we will hold your hand and make sure that you learn and you have mentorship for those things. High interest rate, we've talked about that. I, as a person, will not take any loan from any bank. I don't care what the terms are, because then I'll start working for the bank. And what kills most SMEs is high cost of borrowing. Most of their profit will go to servicing those loans, and that's why we're having this discussion. It's about time that SMEs start looking at the next level of capital formation in their businesses. Next slide. So we wanted to check whether there's anything, how Nigeria is faring. Is this issue just peculiar to Nigeria, or is it something that is seen in other jurisdictions? So we just did a quick comparator analysis. You can see that in England, in the LSC, this is not clear, this is New York Stock Exchange. This is Johannesburg Stock Exchange. You see that you have increased SMEs actually being listed in the public market. The slides of this will be shared because I can see that most of these numbers are not clear enough. But you have, good enough and sizable number of SMEs listed in their public market. Now, if you compare that to Nigeria, we have 7 out of 40 million SMEs. So that shows that there's a lot of headroom and there's a lot of work to be done from a Nigerian perspective. Next slide. So, we can spend all day talking about reasons why SMEs avoid accessing the capital market, but I'll dwell on just a few. We've talked about high compliance and regulatory costs. The second one is lack of awareness. I'll talk a little bit about this. The first thing most founders will tell you is, I don't even understand what the capital market is. I don't even understand what a bond issuance is. I don't even understand what equity listings is. And behind it is this unfound fear that if you go public, you're going to lose your company. Let me categorically state it here that there is nobody that has gone public with their company and lost control of their company. Not the Dangote, not the Elumelus, nobody. Not the Mikio, that is a growth company. That is an Indian company, but Indians that have naturalized in Nigeria. They've opened up their company. You can list on the capital market and still have control of your company. We've talked about inadequate corporate governance structures. Most of the SMEs are unstructured. It's a one-man business. He's the CEO, he's the CFO, He's the tax person. Yes, so he's everything. And the thing about the public market is you can't take money from the market and 2 days later we see you driving a plane. Or you've bought the latest Rolls Royce in town just because it's your company. It doesn't just happen. It instills discipline and confidence in you. Liquidity and market depth is one thing that, which is closely associated with valuation. A lot of people say, is the market liquid enough? Do I have better valuation if the company goes public as against private? I will talk a little bit about it, but the Oga Bata Bata Verod is here. Maybe we want to put him on the spot to say, how come in Nigeria we haven't had any exits from a PE or VC firm, and they are sitting on loads of portfolios, good, profitable companies that should be in the market. Track record, I talked about this company still having some of their accounting principles in GAAP, so we need to do something about that. SMEs need to start thinking long term. A lot of people think it's me, myself, and I. And I like the fact that someone had mentioned here, it's better to own 10% of a good company than own 100% of a company that is going into liquidation. So we need to start changing that mindset. Then the perceived listing stigma. And we are here today to de-emphasize this. To de-emphasize this stigma, to de-emphasize this loss of control, and a few other things that typically you hear founders or entrepreneurs or people in the SMA ecosystem talk about. Next slide. Keep going, keep going. Keep going, keep going, keep going. Okay. So this is some of our thoughts in unlocking capital. Next slide. In collaboration with BOI, we feel that, first of all, we need to take advantage of our distribution channels. NGX has branches all over the country, same as BOI. So, and most of these SMEs are scattered outside Lagos. So we want to be intentional about having co-branded or co-branded events outside Lagos that will begin to talk to some of these SMEs outside Lagos. Incubation and scale up. A lot about it has been talked about. A part of it is what we do with our X Academy. A part of it is also something that we want to take up if the right funding and enabling environment is allowed. Capacity building, capacity building, capacity building, capacity building. If most SMEs have the right knowledge, have the right guidance and mentorship, most of the issues that we are talking about here will be solved. And access to finance. We want to encourage BOI, and this is a call out to BOI, to begin to look at channeling some of their portfolio companies or some of their companies that they keep refinancing debts to encourage them to start going into equities. It can be something as simple as just doing a debt instrument or a senior note or whatever, or doing a convertible. But from a growth and scalability perspective, we're actually not helping these companies by just refinancing debts with them. Because what you find out is if anything happens, the business goes down, you come after the owners, let us take it to the next level. And what we also want to do with BOI is, in terms of your credit analysis, you can begin to build some of these metrics into your credit analysis to help some of your portfolio companies access public capital. Next slide. So we wanted to quickly talk about NGX. We wouldn't want to assume that everybody here knows about NGX. So we pride ourselves as the sustainable exchange championing Africa's growth. As at the 25th of June, I think, we have a market capitalization of $79.71 billion. And in Nigeria, if you convert it, you're talking about 1.323 trillion. We pride ourselves at the exchange that services the largest economy in Africa. Few things, basic things that you need to know. We have 237 listed securities on the exchange, broken down into 157 fixed income or bonds. We have 100 active members. The qualification here is active members that are brokers that are in good standing. And of course, we have 12 ETFs. Today, we have 148 listed companies, and those listed companies are listed across the growth board, the main board, and the growth board, which is where most of the companies are listed. We have a few products, next slide. We have a few products that we're working on, and we hope to bring it to the market. We belong to, because we see ourselves as an international organization, most of our standards are in line with international standards. So from an international perspective, we're a member of the World Federation of Exchanges, we're a member of ASEA, we're a member of IASCO, and we're a member of World Economic Forum, just to mention a few. And on the local side, domestic side, we're an active member of the Nigerian Economic Summit Group. We're a member of the FSS 2020. We're a member of ASEA. Just to let you know the level of visibility that being listed on the NGX would afford you. It gives you international exposure, and it gives you the highest level of compliance. Next slide. So these are some of our products for today. It's basically equities, fixed income ETFs, and derivatives. Equities is your normal shares, that is ordinary shares, investment fund, REITs. We're in the process of rolling out digital assets, because that's the in thing with the Gen Zs, and also that's the in thing with people that are trying alternative ways of fundraising. For fixed income, we have corporate bonds. Sovereign bonds is maybe 90% of the bonds listed on the exchange, because the federal government actually uses the sovereign instruments to fund the budgets. You have supranational bonds, and of course you have Euro bonds. NGX is big on sustainability initiatives. We have different types of SDG instruments listed on the exchange. We have a green bond listed on the exchange, and we have other forms of sustainable instruments listed on the exchange. Last but not the least is infrastructure bonds, which seems to be developing quite a few appetites in the last 2 years. The capital market has found a way to raise capital that would help fund the infrastructure gap in Nigeria. So we have, infrastructure instruments now, both on the debt side and on the equity side, listed on the exchange. Moving on quickly, ETFs and derivatives. You want to hedge in the market. You want other asset classes that you would want to invest in if you don't want to invest in equity or fixed income. And these are the products that is highlighted in green, I think, no, blue, are the products that we are working on and hopefully should be launched very soon. Next slide. So how do you list? And I'm sure some of the entrepreneurs that are here or founders, that this is where it gets interesting. The first cardinal rule is that you can't access the market if you're not a PLC. You've got to be a PLC. And after that, if you have your board approval to access the market, you could either do it via IPO. IPO is when initial public offer, when you're offering your shares to the public for subscription, or what we call listing by introduction. Listing by introduction is just listing your shares in the market. You're not raising capital. What you're looking out for here could differ from company to company. You might be looking for visibility here. You might be looking for price appreciation here. You might just be looking for enhanced governance. And the target here is, depending on the market cap of the company, you either list on the premium board, the main board, and the growth board. And some of the questions that were asked earlier on about technology, we haven't launched it, but we have a technology board that is ready to go. So every day you keep hearing that some of our tech companies are beginning to wind down. What we wanted to do with this board was to forestall that. We wanted them to come in and list, even though they weren't profitable. We made the rules in such a way that they could come in and list and, begin to put the companies in proper shape, have proper governance, and have investors that understand tech take early positions in tech companies. We are still working on that. You can also access any of the boards through private placement. And after that, you can come out and come and list. Next slide. So this is the boards which you can list on the exchange. It's the premium board where you have the highest capitalized companies with the highest number of corporate governance in their DNA. This is where the big boys are. This is where Dangote, Airtel, MTN, the banks are. Then the second board is the main board. This presentation will be shared. Because of time, I'll be going quickly over them. Is the main board. This is where 80% of our listed companies are. the free float here is 20%, and most of the time we just ask whether you have 3 years operating track record and you're profitable. A lot of people will ask, what is free float? Free float is the quantum of shares that you put in the markets so that there is liquidity for your shares, the shares are being traded, and you have price discovery. Most of the stock, those of us that are very conversant with the capital market, any stock that don't have good enough free float, you find out that most of the time they are very illiquid, and you don't want that. We would spend a lot of time with the growth board, where the market capitalization is 50 million to 500 million. The free float is 10%. So because we want to encourage SMEs to list, we've made the regulation for the growth board very light. It's not as stringent as what you have in the main board and the premium board. And, you know, at times we even say, if you don't have a 3 years operating track record and you have a core investor that has a record of 2 to 3 years, we will take that. But this is not the place to go into the technicalities of this. And of course, we have the growth board. Like I said, this will be distributed so that people can have it and maybe reach us to ask more questions. Next slide. But we'll dwell a bit more on the growth board. Typical steps to listing, and we normally have that. It starts with consultation, in-house consultation, get your board approvals, just to make sure that the board is aware that you're taking the company public, and you know they understand and they are in bed with you. You start documentation with your financial advisors. Quite a few of them are here. You start the marketing and distribution. I mean, with this, NGX has really taken the game to the next level. So a lot of people would say, how do you distribute? During the last 12 months, during the banking recapitalization, what we did was we built a tech platform where you can actually do end-to-end, subscribe to shares from the comfort of your home, and buy an initial public offer that is ongoing. The reason for that is we want to make sure that every Nigerian that has a phone, a laptop, can be able to partake in the primary market or in the capital market. You get your board completion meeting after regulatory approvals. Go to SEC to get approval. You do your allotments, and you come and list on the exchange, and your shares become tradable. Next slide. For bonds, it's a fairly shorter process. You do consultations, get your mandate. But one critical thing and differentiating factor about bonds is that you must have a credit rating. Credit rating is when you go to a rating agency and they look at your present cash flow, your future cash flow, and they give you a rating to make sure that you can meet your obligations as and when due. The higher your credit rating, the more investors feel safe to give you their money over time. After credit rating, you do your documentation, you get your approval. Depending on the type of bond it is, you do your book building, allotments and listing. So it's a fairly shorter process, and it's not as expensive as listing. Next slide. So we want to talk a bit about the growth board as a catalyst for SME growth. Remember we said we are concentrating on the mid-tier and the large corporates. Those people that have promises of profitability, those that are scalable. And what we've done with the growth board is to say we want to encourage fast growth companies to begin to access the capital market, and this is also designed to get companies that have good corporate governance but are not listed to begin to access the market and not be intimidated by the big boys. So it's specially created for SMEs that want to access the capital market. Next slide. It's divided into two entries. The first entry, we call it the entry segment, still a bit more diluted in terms of regulation. We're talking about listing requirements of 2 years, or a majority shareholder is a high net worth individual as defined by SEC. You have a free float. I've explained what free float is, of 10%. Market capitalization of 50 to 500 million. You need a designated advisor. People like Sam would hold your hand to let you know what is possible and what is not possible. You need a minimum shareholders of 25 people. So that fear of, oh, if I go public, they will tell me bring 100 people, 25 people, your home run. And directors can retain a minimum of 50% of their shares in the issue for a minimum period of 12 months. So the owners of the company or the finals of the company, if you list, you can't dump your shares. You have to hold at least 50% of your shares. The reason for that is we don't want people to do dumping. You list your companies, 2 months later you dump everything and walk away. We've seen it happen in this market before, and we don't want that to happen again. So that's where regulation has become a bit more innovative and market-driven. The other segment is the standard segment. This is fairly people that are a bit more mature, the large corporates. Minimum free float is 15. Market capitalization is between 500 and 4 billion. Number of shareholders, because this is a much larger company, you can see that the number of shareholders increased from 25 to 51. The same thing, directors will have to hold their shares for at least 12 months, 50% of their shares for 12 months. We felt we wanted to debunk a few things by showing you some of the journeys that some of our growth companies that are listed on the growth board has done. So we decided to use Chalarans. When they listed, it became psychosound that in 2015 to 2017 that they needed to restructure to be profitable and to make investors see the intrinsic value in the company. So they restructured. When they restructured, for them to start, and they went into other businesses after the restructuring. When they restructured in 2018, they got ISO certification, which enabled them to start dealing. Yes, they are a growth company, but this certification gave them the impetus to start engaging or start doing business with large multinationals that is in their sector. One of the good things about being listed is that it's your currency. It gives you credibility. So in 2019, they entered into an international partnership with DMK Limited to help them with market expansion and technical know-how. And the reason why this company decided to go into this partnership with them was because of one thing. They were a listed company. Their books were verifiable. They could do their DD and due diligence. And from a reputational perspective, they were ready to stake their name with this company, even though they are here in Nigeria. In 2020, which is when we launched the growth board as a result of feedbacks that we got from the ASEM board, Chalarams migrated to the growth board. And in the last 12 to 24 months, they are reporting mind-boggling figures of over 10 billion in revenue. This was a loss-making company, and 5.7 billion in pre-tax, whatever. But that is one aspect of the message here. If you look at the graph under this journey, we use two metrics. Within the same period, the share price for Chalarams increased by 367% in terms of price appreciation. And in terms of market capitalization, it grew by 258. What we then try to do in this presentation is to extrapolate this with if you had put this money in a fixed income instrument. You wouldn't get this, not in any way, not in any form. So for the investors, for the founder, and the entire capital market, it's a win-win situation. But you just need to do the right thing. Next slide. Same thing with Living Trust. Living Trust was a moribund mortgage company. When they became listed, the story changed. They rebranded, listed on the exchange. They are reporting over 500% growth in profitability. And the same thing with, if we use the share price metrics and market capitalization. Share price, they've increased by over 600%, and in market capitalization, they've increased with over 600%. The only place where you can have an underlining, have this kind of appreciation is in the capital market. Any other thing would have been kalo-kalo. And you can't do kalo-kalo in the capital market. Next slide, please. Value proposition. Next slide. I've talked about this, so I'll just quickly go over it. We provide a platform for capital raise. We provide a platform for liquidity and price appreciation. We give companies the opportunity to have a diverse investor base by bringing in or telling other investors to come into the business and share the risks of the business with the owners. Corporate governance, I can't overemphasize on it. And financial literacy and, X Academy is our capacity building platform that have different verticals. Whether you're looking at corporate governance, whether you're looking at simple training, whether you're just looking at feeling your way to know what your options are, X Academy is the platform that would help you, train you, hold your hand, and give you informed decision. The word there is help you with informed decision. Ugochi, please stand up. Ugochi is the head of X Academy at the Exchange. Next slide, please. So what is, again, people will say, why go public? What am I getting? What's the value proposition? I'll just take two. I've mentioned a few. One of the best things the Exchange does for listed companies is advocacy. So we take thorny issues and we approach the government and we advocate and legislate for listed companies. So if you're talking about FX distribution before the FX was liberalized, listed companies, quote and unquote, were given preference in terms of FX distribution before this last regime. There's something we call facts behind the figures and closing gongs. And basically what it is a lot of companies do analyst call. But the real people that actually help you with your shares in terms of share appreciation, price appreciation, or how well your share price does is actually the brokers. What we do is we use our platform and we bring the brokers together and you come and, in your own words, talk about your financials, talk about your future plan, talk about whether you want to raise money, anything you want to talk about. What that does is that the brokers take that information and they take positions for their clients in your shares. The market can punish you for hearsay. So if you allow people to, rumors to dictate your price, the market can punish you for it. So we provide this platform where issuers come and engage the market. And of course, we visit companies, we do factory visits, and we do sectorial CEO dinners where we bring CEOs of companies, we bring policymakers in a closed door session, and we discuss tropical issues that is bugging a sector. And the outcome of it turns out to be policies that, some of the policies that you see with government. And last but not the least here is closing gong. We tell companies to come and close the markets if they have a monumental achievement that they want to put out to the market. This is beamed in over 300 countries in Africa, CNBC channels, the print and news media, it's there, and you close the market. And this is one of the highlights of, at most listed companies aspire to come and close the market. And there's also what we call the closing gong bounce when it happens. At times you see that when a company comes and closes the market and give the right information, people take short-term positions in their shares straight away, and you see a bounce, positive bounce in their shares. Next slide. I've talked about capacity building, so I won't waste too much time on it. Next slide, please. So for us, this is a call to action. We take this engagement very seriously. What we want to do is to
to encourage SMEs to come out of your shadows and begin to access public capital through the NGX Growth Board. And we're ready to work with you to make sure that it's a seamless experience and not a painful experience. But more importantly, BOI is a government agency, and you have policy makers here listening or would listen to this. We want to encourage the government to begin to put proactive policies, whether through BOI, SMEDing, MAN, whoever it is, that would catalyze growth for SMEs and gravitate them towards a public listing so that they are sustainable and they are scalable. The likes of Alico, Access Bank, just name it, Zenith Bank, will not be where they are today if they didn't take advantage of the capital market. So this is a call for everybody here, those listening at home. Start thinking of how to take your company to the next level that would outlive you. Because once you become a listed company, your company is on that part of outliving you, and you're on that part of beginning to create transgenerational wealth in a very transparent way. I think this should be the next slide. Last slide. Thank you very much.
Thank you, Mr. Tony took us to school real quick, giving us an extensive information, may I even say maybe an information overload, as to how entrepreneurs can leverage the capital market for capital formation. Please, another round of applause for him. Now, perhaps he's been able to convince you, and maybe there's a little bit of confusion you have. Because of our time, we'll be able to take 2 questions. So if you have any question for him, okay, so I see one. Okay, so we have 2 hands. Let's start with this. Please keep your questions brief. You can just introduce yourself and then take your questions. Thank you.
Thank you very much. My name is Dr. David Adewale. First of all, I would like to say a big thank you to the management of BOI for inviting some of us here. I'm one of their BDSP, and I'm glad to be here. Thank you very much. And thank you for your presentation. When Mr. Issa, the director of BOI, was talking about taking advantage of finances, alternative finance, what came to my mind is, can we do without the normal banks in moving forward as alternatives? I talk about, for us to be successful with any BOI project, you have to get a bank guarantee, and bank guarantee comes with the bank, and in most cases it can be so challenging. And I'm trying to find out if there is a package. When you talk about bonds, can a bond be an alternative for SMEs to access so that it can work with BOI? Number one, because we do have some bonds like that, like insurance company, but BOI doesn't take that. Then 2, you talk about, though you try to, because of time, talk about documentations. I know working with BOI, documentation is very key. BOI has really helped many SMEs to perfect their documents. And documentation, cost of documentation alone pulls some SME away. They prefer to go to the bank. For example, there is a company that are doing well. I don't know how they go to that. By every standard, they are qualified for BOI facility. But they've not been paying their FRS tax. For them to pay the return, they pay like 80 million. I wonder, they've been doing well with the bank, but because of what we call the corporate governance or whatever, because it's been in society, sometimes it happens. But because of the loan, I have to go bring your FRS. You can't scale through. Now, if you are going to the alternative market, Hope those clients will not come. Is there any alternative, or everything will be, document must be completed, and it will be at a high cost? You have to pay the legal, you have to do the valuation, and what is the cost? Even at the model you mentioned, the general model, do you have an average cost if somebody wants to enter?
All right, thank you.
Thank you.
May we have the next hand behind? Okay, so you would like to take the answer, take the response to that question.
Let me just answer that before I take the next question. So, to your last question, there is no costs, direct costs, that one can stand here and tell you this is what it would cost. It depends on what you want to do, the amount of money you want to raise, the quantum of delinquent tax that you've avoided over time and everything. So during my presentation, I mentioned that we have certain financial advisors that are in this room today. Again, let me, in no particular order, I can see Stanbic here. I can see Sam is here. And I think, sorry, can I stand up? Equity is here. APT is here. Mary STEM is also here. So you have the support. They will need to sit down with you and understand where your business is and what it would take to take you, both direct and indirect, to where you want to go. And if there are bottlenecks that you might experience in the initial engagement, please stick to it, because those things must be cured before you can access public capital, because you're taking money from people. The other question is documentation. It depends on where you're, debt. If debt, is a universal, it depends on where the company is. Companies go through different stages, right? So if you're in your later part of the spectrum, right, then bond becomes an instrument that you might start considering depending on your cash flow, your profitability, and funds utilization, and your credit rating. Those things come into play. But the capital structure of a company is not all-inclusive. For short-term obligations, bank loan is still the way to go. But if you're looking at infrastructure financing and if you're looking at long-term financing, your ability to mix and match short-term and long-term, meet long-term loan obligations becomes very important and relevant. What kills most SMEs is, portfolio mismatch. They are building a factory that will not produce or earn revenue in 7 years, and they will go and take term loan that immediately they disburse, you start paying. So these are things that we need to be mindful of. But your financial advisor would always give you the best advice.
All right, so let's take the last question. Sorry.
Okay, good morning, everybody. Good afternoon. First of all, I think I want to say thank you very much to the NGX and the BOI for this very timely workshop. And I feel like I'm sitting down on two sides of the divide because I used to work with Tony Beziako at the NGX. I used to work with Ugochi as well, Clifford outside. And today I'm sitting down right here, being a beneficiary of the BOI facilities. So maybe one day you guys will join us on this side of the divide. Okay, so thank you again very much. I just want to say a few things. You know, the DG of the SEC was in Lagos a couple of weeks or so ago, and you know, one of the questions for a workshop, and one of the questions that came in that forum was that, you know, it would seem like the way the market is structured, all right, we have people sort of playing in different silos. So what do I mean? For example, we have millions of SMEs in the market today. We only have about maybe 150, 160 listed companies, okay? And it would be good to see a lot more of this type of workshops because a lot of people don't know the benefits that are on the stock market. A lot of them you've listed, you know, corporate governance, visibility, capital raising. A lot of people want to list, but they don't know the opportunities that exist, you know. And the question that I wanted to ask was, as a market practitioner, all right, and as an investor, how do we sort of plug some of these loopholes? Because, I mean, it's not, who is going to bear that cost, in a sense, if you know what I mean? You know, the NGX is doing a lot to reach out, BOI is doing a lot to reach out, but it seems like there is still so much that needs to be done. The word is not really getting out there. I mean, recently we've seen the stock market hitting new highs. I mean, we're over 100,000 in the all-share index. A lot of people are asking questions. We've seen a lot of investors. I think there seems to be a rebirth in the market. All right, things are happening, but people don't know. And I feel that, you know, there are a lot of opportunities, there are a lot of, like you've listed out here, but a lot more needs to be done. This is one of them. I think there needs to be a lot more of a push out there for people to take advantage of some of these opportunities. They are there, but people don't really know about them. So, you know, the question or the comments, I mean, there's a question somewhere in there, I think, but, you know, of the comments is that, you know, we might need to sort of, you know, push out the narrative a little bit more. We might need to, you know, extend and broadcast some of these opportunities a little bit more to get more people to galvanize that critical mass that we want to see in the market. But I'm not sure who is going to take on that responsibility, all right? Is it the regulators? Is it BOI? Is it the NGX? Is it the issuing houses? Where does that lie? Who takes on that mantle? Who bells the cat, so to speak?
If I may, before the next question, the answer is simple. All of us need to buckle up and start looking at the bigger picture. And that's the reason why we started this initiative. The BOI guys will tell you that this was signed in 2020 and 2022. And we've been trying to lift this off the ground. But over the past years, we haven't been successful at doing that. So it hovers on everybody, and that's why you have a diverse subject matter experts in this room today. You have the financial advisors, you have private equity, you have BOI from the government side, you have NGX. All hands needs to be on deck to make it happen. And if we make it happen, what you would see is, you know, the big stories of the large cap companies would not be too much of an outlier at the exchange, because by then you would have bettered the next big boys who over time will also become big themselves. So it's all hands on deck. We're happy to lead that charge, and we're happy that BOI has found it important to be in bed with us. And we welcome any other person that share this same dream and have the same goals.
Okay, good afternoon. My name is Shola Bickerstedt, FIC Professionals Network PLC. Happy to inform you that we started the process and we plan to complete the listing this year or latest first quarter of next year. So we're happy to join the train.
Congrats.
Thank you. Just some clarification. On the growth board, there seems to be a cap of 4 billion. Where capitalization is higher than 4 billion, clarification is required on that. Timelines, commencement of process, completion of process. Is it 2 weeks? Is it 2 years? You understand what I mean? Yeah. It's important for clarification. Track record, is that audited accounts or management accounts? Yes. So just for clarification. So the technology board, we are going for the technology board. We assume you are waiting for us. So we'll be happy to reactivate that and, take it up from there. Thank you.
Okay. Thank you, sir. That sounds like music to my ears. So the cap thing, the market capitalization thing is just for us to stratify companies and put them in different buckets. But when it passes 4 billion, you make a decision whether you want to be on the group board or you want to come onto the main board. It actually depends on the issuer. Some issuer wants to be on the, even though their market cap exceeds 4 billion, they might want to be on the group board because they want to learn, disclosure requirements, regulatory, because once you become listed, your behavior changes. Like I said, before you go to the press, you must take permission from us. So some people want to use the growth board, to feel and get acquainted and train their people about the capital market and what it means to be a listed company. So the market captain is just for stratification. It doesn't stop you. You make a decision on what you want to do. Timelines, very interesting question. If the issuer is as bullish as you sound, if you're doing an IPO, let's say between 6 and 9 months, and when you have a financial advisor that is also on top of his game, I mean you're starting from scratch. If it's a listing by introduction, you can do that in 4 to 6 months. With some of the initiatives going on both at the Apex regulator and NGX today, we're looking at our rules and our approval processes, and we want to say that regulation today has become a market enabler than a disruptor. So we want a situation where before the end of this year, we should be able to announce that if you want to do something like a listing by introduction, you submit a few documents, we do a few DD, within 2 or 3 weeks, you can list. That is where we want to go. IPOs is a bit different because you're taking money from the public. So it requires a bit more due diligence to make sure that retail investors are protected. I'm sure my colleagues has taken your card and your number. We'll be all over you like, and I'm sure the other FAs will do the same. Thank you. Thank you. Thank you very much.
Thank you very much, Mr. Tony Ibeziako, Head Primary Markets, NGX. Thank you so much, sir, for that insightful session. And to every one of us seated here, thank you so much for your active participation. We appreciate you. Can we give a round of applause to ourselves for just being here and participating actively in this event? We appreciate you. Thank you. So like we said at the beginning of the event, this is not just presentations, talk, and talk. We are going into perspectives of the topic for today, which is leveraging the capital market for SME sustainability and expansion. So very quickly, we're going into the panel session, which we have Mr. Joseph Emujeze, partner Udo Odoma, in this panel session. Can we give a round of applause to Joseph Emujeze, a partner at Udo Odoma Bello Sage. Thank you so much, sir. We have Sam Chidoka, MD/CEO, and Korea Advisory Services Limited. A round of applause for Mr. Sam Chidoka. Thank you, sir. Mr. Kendall Anaye, who is joining us virtually. I think he should be able to participate virtually, and he's also a part of this session. And the session will be moderated by Fisayo Ogundare, Senior Manager at PwC. Let's give a round of applause to Senior Manager at PwC, Mr. Fisayo Ogundare. Thank you so much. So we're going straight into it. We're talking about unlocking capital markets opportunities for SMEs. So let's get straight into it. Thank you. Mr. Chike Chikwelue is the Group Head, Equity Investment, Bank of Industry. He's also a part of this session. He's representing the Executive Director, Corporate Finance and Investment. Thank you.
Good afternoon, everyone. I just want to check something in this room. If you're a founder here, SME here, can I see your hand? Mr. Tony, can you look at the back? If you're a founder here, SME person, can I see your hand? It seems we have more financial advisors in the room than online. Okay, they are online. All right, fantastic. We don't have much time. And so I will just dive straight into the questions. I have a set of questions, simple answers. Let's be as brief as possible. Let's go in depth where we need to be. I'll start with Mr. Sam, right? We've been talking about the opportunities SMEs have relating to the capital markets. We've heard presentations from Mr. Tony, NGX. We've heard presentations from BOI. The question is, what are those opportunities that are in the capital markets that these SMEs can explore, that founders can explore, prospective founders can explore? In your experience, you worked with a number of them, numerous number of them. Some have been successful, some are in the pipeline. What are those opportunities that are there for these SMEs?
Okay, thank you very much. I hope you can hear me. All right, I think that first is to thank BOI and NGS for putting this together. So when it comes to what people who are founders or SMEs can gain from being in the capital market, I'll say the first thing is access to capital. Capital formation is a big issue in Nigeria just because of the cost of capital. right? So I'd say the first thing you get from the capital market is access to capital. Being an SME, sometimes it's difficult to get access to capital through other means, but the capital market allows you to do that. Another thing you get from the capital market is valuation. When you are a listed company on any exchange, based on your price and your market capitalization, you can tell what the valuation of your company is as time T. The other thing you get is liquidity. An exchange allows you, listing in an exchange allows you to make your shares tradable. People can buy and can sell. So are you going to get people invest in your company because you're not listed on an exchange? Yes. Is it going to be easier when you get listed on an exchange like the NGX? Yes. It also allows you to build up your governance structure, because just being able to list on an exchange, there are some prerequisites you have to meet. And when you do those things, it gives you some governance discipline in terms of your board, in terms of your numbers, in terms of just regulatory nuances that helps you to do better as a company. All in, I would say from my experience, for those who qualify, for those who have gotten to that stage, the capital market is not for every company, I must say, but for the companies who qualify and are due for it, it's always my recommendation that you get listed and be able to raise capital when it's required.
Thank you. So, just talking about capital, what types of capital are there for these SMEs, and what are the requirements, regulatory requirements? Can you just touch base on that?
Okay, so I think that for SMEs, many SMEs are still at the point where you're trying to get patient capital. Again, depending on your industry. There is no one-size-fits-all for everybody. There was a time, if you remember those who have been in the market for long, if you remember pre-2008, there was a time they came to you even in church and at the mosque with investment letters, giving you, buy these shares of this company, buy the shares of that company. Some of those companies are dead now. People were investing in what they didn't understand. So I dare say that raising capital is about capital structure. Your capital structure is about your individual business, it's about your industry, it's about the economy at that time, it's about the use of proceeds. This might sound like advertising, but you see, one of the things I found out about Nigerians is that we don't like paying for advice. We only like paying for tangibles. Can you raise money for me? If you raise the money, I will pay you. But the person that sits down with you to say, no, you don't need equity at this time, you actually need debt. No, you don't need debt at this time, you need equity. You need mezzanine financing. You need a combination of equity and debt. You don't even need to raise money at this time. If that person sits down with you, you're not willing to pay. So Nigerians don't go to the hospital until we're sick. We don't go and do medical checkups until something starts to hurt. The same attitude we have with our human body is the same attitude we have with our companies. We don't seek advice until it starts to hurt, until the company is bleeding, or maybe until it is red. So my advice to the founders and SMEs in this room is seek advice. It is, somebody said, if you think education is expensive, try ignorance. So I'd say, to answer your question, some people here are expecting free advice now. That Sam said, Sam Chidoka said, you should raise equity. It might not work for your business. We need to see your business. We need to dimension the business. We need to understand the business. We need to understand the business life cycle. We need to understand whether it's a cyclical business or one that functions at a particular time. There are many nuances. And you see, don't be all things to all men. Don't be the CEO, don't be the CFO, CEO, financial advisor, HR manager, admin head, all of that. You need help. No one person can do it all. So in answering your question, there's no black and white answer to it. It has to be specific, tailor-made. Thank you.
All right, so going specifics, Mr. Chike, when you look at traditional financing, a lot of SMEs shy away from traditional financing, right? From a BOI perspective, what other tools can SMEs leverage on? Because like Mr. Sam mentioned, you look at capital structure, you're asking yourself, should I be getting debt, should I be getting equity? From a BOI perspective, what other tools do we have does BOI have that can help its SMEs expand and grow?
Thank you. Before I start, I just want to maybe give two examples, and then I'll now go into the answer to that question. How many of us remember, like a month ago, there was a news agog on social media about Amala Moke?
Yeah.
How many of us remember? And the numbers were were interesting, right? 2.3 billion naira in 3 years. So that's like about 800 million naira every year. Now, the interesting thing about that is I'm an investor in Amala Moke. A lot of us in this office are investors in Amala Moke. If you go to her office, if you walk into her store or her restaurant, when I go there, I count like about 70 people on the line. On the Amala line, there's a line for rice. And you now have a line outside for Chowdeck and Glovo. Now, to shock you, that number that was posted on Nairametrics was just from Chowdeck. So it means that without calculating those numbers, she does nothing less than 7 billion a year. And I can tell you for free. Because if you go upstairs, and I'm telling you this because I'm an investor in Amala Moke, she has close to about 35 people sitting down and eating. So when we are looking at the different types of financing that we need, okay, let me just talk about the last one. I have a tailor, Dio, fantastic guy. I saw his work is very good, and I sat down with him. I said, let's look at your numbers. For 2 months, we studied his numbers, and this guy makes almost like $1 million a month. And I'll give him materials, let's say in February. I'll get it sometime in December. I've introduced maybe like 30 to 40 people to him, and it continues. Those people introduced. So I said to him, let me invest in your business. And he says, no, sir, just borrow me money. I'll be able to do this thing and go. But what he actually doesn't even need money. What he needs to do is scale up, to expand, and we can help him structure that. So in terms of alternative financing, right, I'll look at it from two angles. We're looking at additionality in terms of financial additionality and operational additionality. So in terms of financial additionality, we look at things like unlocking capital from, okay, you can't hear me. Unlocking capital from other sources that we typically will not be able to. So take, for instance, we have a program called the TFSC, that's Transforming Financial Systems for Climate, which we are doing alongside with the AFD, which unlocked about 100 million euros for us. What that does for us is training us in BOI as well as our clients to prepare them for ESG integration into their businesses, right? That is helping unlocking capital. We have a team that is also dedicated to non-interest financing. That is another pool of financing that is being unlocked. In terms of additionality, we're also looking at, in terms of credit guarantee companies. Somebody spoke about bank guarantees, right? So what we are looking at is working with companies that help to guarantee some of these transactions that will help to unlock, to de-risk a portfolio and unlock more money. So we've done things with African Guarantee Fund and the Nigerian Credit Guarantee Company that was just established recently. That is in the area of financial additionality. In terms of operational additionality, like what I said about Dio just needs to better his operations to be able to scale up. Absolutely. He does not need more money. So sometimes we go into companies, in our corporate finance function, we have an advisory team, we have an equity investment desk that I head. And when we look at some of these companies, we try to identify areas where we can help them in terms of their operations. So take, for instance, we partnered with one of our fund managers to help reduce the operational cost for a large cassava processing factory. Before that time, she was using diesel, NEPA, and all that, and she was spending about 60 million. And with the partnership with that fund manager, we were able to provide a biogas solution that reduced her power consumption by her power expense by 50%, down to about 35 million. Now, did she need more money from us? No. We were just able to tweak her operations to unlock more money for her. In terms of second point I'll mention is building a strong ecosystem. Now, what we'll look at is go-to-market readiness. We've spoken about that. We are talking about going to the stock exchange and all that. Dio Detailer that's way above his head. And Moke Amala probably would not want to do that, right? So in terms of our convening power, right, we've been able to act as executing agents for a lot of SME designated funds. So NGX, we did the Brave, we're currently doing IDICE, and all these fundings are either grants, equity, or quasi-equity. So building on our network as well as our convening power, we're able to unlock capital that is not your traditional debt. Having said that, I think my ED also mentioned earlier on, we've now developed our SFF, our Sustainability Finance Framework, which is going to help us go into the market to raise green bonds, sustainability-linked bonds, and these type of financing typically are lowly priced. So with the things that we're doing in terms of building this ecosystem, we are positioning ourselves to be a partner and enable that ecosystem. When someone was talking about visibility, right, we have a network of clients, right? And what we typically do is when we have these kind of customers sit in our books, we introduce them to one another. So in terms of visibility, because of our convening power, we're also able to do that. Finally, I'll just mention, someone talked about collaboration and all that. We've been able to partner with a lot of firms, especially more recently in the private equity space, right? Because we found out, because traditionally we are LPs, limited partners to a lot of these funds, and we find out that these GPs normally face Herculean tasks going through due diligence for each LP that they are going to get money from. So what we did was we've now formed a group of LPs outside Nigeria, within Nigeria, where we are trying to streamline our due diligence process. So if you go to, let's say for instance, we partnered with African Growth Fund or MasterCard, right? You have been able to access money from the African Growth Fund. If you come to us, I'm not going to be asking you for a different set of documents, right? We will be asking you for typically the same thing. So it makes that process seamless. Lastly, we mentioned about the impact fund, right? And that sits under my group, and that's a vehicle through which our equity investments are going to pass through. Like Dr. Isa Omagu said earlier on, we're going to be focusing on deploying equity, quasi-equity to high-growth companies as well as companies that need revitalization. So we also understand that sometimes some companies don't have that structure, and because they don't have that structure, they do badly. But you come in there, you tweak the governance a bit, because what we also want to do in terms of additionality is proper corporate governance. You come in there, you have representation on the board, and you are able to tweak some things that helps the clients grow. So I think for BOI, in terms of how do you say, providing alternative financing, I would think that we are doing a very good job. Thank you.
All right, thank you very much, Mr. Chike. I think that was a lot to summarize. I'm sure some of the SMEs in the room will be asking, okay, I need to jot down a lot of the things they have said, but I'll just go to one of the founders online, Mr. Kendall from TZT. From your experience as a founder, a prospective company that's wanting to list, what are the challenges you have encountered in the ecosystem? What are the things that you think can be improved on that will help yourself and your company? Mr. Kendall. Can you hear me? Can you hear me? All right, Mr. Kendall, can you hear me? All right, Mr. Kendall, did you get that?
Yes, all
right. Okay, so the question I was asking is, because we have a lot of tools, a lot of opportunities in the NGX-BOI, as a prospective company, what are the challenges you have faced, and what do you think the ecosystem needs to do that will help solve some of the problems you have and help you grow and expand into the future?
Okay, thanks everyone. So far, the thing about having a company that's ready, we started off with Strap, so this personal form is growing the business, we got to $1 million laundry, and then we were able to raise venture capital after. That January, and we raised a little bit of capital, and we were able to get to EBITDA positive. So a few years ago, we also decided just around the COVID period where internet providers and telecom industry was boosted by people working from home, that we needed to achieve profitability. And so we became profitable over the last 5 to 6 years, and we've been profitable and we've grown. But we're also at the point where we're now building more infrastructure, we're now building fiber infrastructure, which requires a significant capital outlay. And that type of investment is patient capital. And so we're looking to then list our company publicly on Nigerian Stock Exchange to access capital. Now the challenges, the things that are important challenges, are some of the things Mr. Tony highlighted earlier on, which is you think regulatory is the biggest problem, but that's not the biggest problem. Because so far all of the steps around that, we've been making great progress with that. The real challenge is really twofold. One is valuation, which again is not pure science, and again reaching out to investors, which will be the larger pension funds and asset managers, right? And so in terms of that, I think a little bit more can be done there in that scenario, in reaching out to those investors. But in terms of the structure, talking with all everything that BNGX has provided has been really good. Also engaging all the parties, capital market parties has also been very straightforward and easy, and reaching out to them and getting them to get into our process of raising capital. So far, so good. It's something I encourage everybody to actually look out to as a founder of entrepreneur, because with this huge pool of investors in Nigeria, we can invest in great companies. Thank you.
All right, thank you, Mr. Kendall. So just to touch on some of the challenges, we talked about corporate governance issues, the legal body. So, Mr. Joseph, I know that in your practice, I think most recently you even helped the client raise about $5 million or thereabout, right? So, from a legal body point of view, how can we help SMEs?
Thank you. I think the first thing is thank to BOI and NGS for putting this event together. I have learned a lot sitting down here. Regarding your question, I think the starting point is that Mr. Ibeziako did talk a lot about what the challenges are in relation to SMEs accessing financing. Right. In the course of my experience, those are some of the challenges that we also come across: for lack of awareness, regulatory compliance, non-payment of taxes, corporate governance issues, risk management issues. So the challenges are numerous, they are known, but how can they be managed? How do we support SMEs to manage such challenges? I think the first thing that I should say is that SMEs in Nigeria, quite a number of them, the majority, are run on quote-unquote a party basis, right? You look at the board composes of husband, wife, maybe children who know next to nothing about running business, right? That's not to say that we are taking anything away from the founder of such businesses, right? Now, if you want to scale as an SME, you want to, what the first thing you should do is have what we call introspection. Where I am, where do I want to go? What do I need to do to get to where I want to go? So that is where we talk about vendor due diligence, right? Diligence yourself. Engage a professional to diligence you. You have to do legal due diligence, you do tax due diligence, and you do financial due diligence, right? This will tell you where your business is, the things you need to do to get to a level that somebody will be willing to either provide you debt or make equity investment in your institution. That is key in relation to moving forward, right? And then in relation to governance, that will also tell you the governance issues that you have. What do you need to do to ensure that you have an institution that it is not just people on your board are not those that you say, oh, yes, sir, yes, ma'am. You want people that can look you in the eye and say, no, we shouldn't do it this way, let's do it this way, so that we achieve what we want. And you also have to be focused as to where do you want to see, where do you want the company to get to? Do you want the company to outlive you? That will determine how you approach the question around governance. The question around regulatory compliance, you will see that when you look into the records of various companies or some SMEs, you will see that it's just, there's nothing in existence. No audited financials. The record at the Corporate Affairs Commission are not up to date. You may have instances where they appoint directors, right? There are no filings at the company's registry. You need license to operate, carry your operations. You don't have a license, but you are just operating. You have a real estate that forms part of your portfolio. You don't have, the title to it is not perfected, right? You have issues that have to do with, there are some cases where you have loan documents. We have taken a facility from some banks or institutions. You have not, because you didn't engage a professional to look at those documents on your behalf, there are several cases where you have signed up to a document that will hamstring you in terms of going forward. So this due diligence I talk about will help you look at those issues and tell you what do you need to do to get from point A to point B and to point Z, right? That in relation to, currently we are supporting an SME that is looking to raise equity funding, right? We have started supporting this SME about 2-3 years ago. They wanted to first finance a debt from one of the institutions. They couldn't because they didn't have, corporate governance was an issue, no audited report, nothing to show, but the company was making money. You can see from the account statement, the returns they have good returns. But having good return is not sufficient for an investor to say, take my money, because taking the money at the point of taking the money is easy. Getting the money back, if it is dead, you have to guarantee the investor that the money will come out, right? The next thing is, if it's an equity investment, you have to be able to tell the investor that you are investing in this business. You are going to get returns, either by way of capital appreciation or by way of dividend payment. So for you to guarantee the investor, or to assure the investor that this is going to be possible, it has to do with how your systems run, how from end to end, how you run your operations, right? Then another thing is, I think I should say this. Generally in Nigeria, I don't know, but I'll talk about Nigeria. Generally in Nigeria here, our people, most of our people don't like delayed gratification. You want to run a business today, you make money, the next thing you need to do is, I want to drive a swanky SUV around town, right? Or you were living in Ikorodu, you made money. Then the next thing is, I want to live in Ikoyi. It doesn't work that way, right? So you have to, what is your, because somebody talked earlier about several fintech that are folded up in the country. Yeah, because you have several that have raised funding, and those funding were misapplied or mismanaged in several ways. So that's why due diligence is key, that enables you to put your house in order, do things that you need to do, that enables people to look at you and say, I am ready to invest in this entity. The last thing I need to talk about is around the question around control. If you to list on the growth board, I think the free float is 10%, right? Yeah. So that doesn't take away control from you, right? So you can look at that. But in terms of the management of the institution, there are some positions you need to give away. You need, for instance, the CFO. You need to have a CFO that can look you in the eye and say, let's do this, let's not do that. We don't need to spend this money, we need to do this. You need to have a CEO that knows your business, that knows where you want to go to. It need not be a family member. If you have a family member that has the skills that you can listen to, quite all right. But in most cases, it is easier and better for you to deal with an unrelated party in your transactions than a related party. You have to deal with that. And then lastly, you have to deal with the question around related party transactions, right? You have an entity where you are running because you now have other people's money in the business. You don't have to start looking for ways to cut corners in quote, by having related party transactions where you have another entity that you contract with at inflated prices. That is not good for your business. That is not good for the growth of your business. That's not good for the sustainability of your business. So you need to be able to look at your transaction and ensure that in dealings with related entities, if you must, that those transactions are entered into on an arm's length basis. So don't over-invoice, don't overprice, don't cut corners. Just do the right thing. With that, everybody that invests in your business will enable you to scale. There are a few fintech in Nigeria that have scaled, and they are just about 3 or 4 of them that have been able to break even from just being SMEs to household name today, because they had to do certain things, which they did. First I talk about a transaction we work on. This is an entity that is an SME. He wanted to raise funding, debt, issue CPs. We started the transaction early last year, early 2024. The plan was to complete Q2 2024, but we couldn't, because there were various issues that we needed to deal with institutionally to make the company ready to be able to do what he wanted to do. So it took us up to Q1 this year to be able to close that transaction. So that is why a self-introspection, self-due diligence, vendor diligence is key for you to have someone that will tell you that this is what you need to do and this is how you need to do it. Don't worry about cost, because the cost you don't want to incur today to put your house in order, you may end up incurring more cost in the future that you could have avoided. Because we have an instance where a company that was incorporated in 2017 has not filed anything at the corporate, just in the as Corporate Affairs Commission, right? And then when they wanted to put the house in order, we have to do back filing of over 6-7 years. So we pay millions in penalties in relation to not filing annual returns, not filing changes of directors, not filing increase in share capital. There were various penalties that were calculated. So you end up spending millions that if you have engaged a professional that are paying little money every year that will be helping you to make those filings, you would have avoided this huge cost that you have to pay to put your house in order. So these are the few points that I need to mention in relation to how SMEs can put their house in order to ensure that other people can trust them and put in money in the business.
All right, thank you, Mr. Joseph. Can't clap for I think we can also clap for BOI and NGX because when we talk about institutional collaboration, they've done fantastically well, even though it is coming late based on their plan. But I would ask Mr. Chike, what other ecosystem gaps have you identified, right, that you think that the BOI needs to look at, or SMEs, we need to preach to more SMEs to utilize other collaborative tools. I remember one of the directors talked about the X Academy, and that's Mr. Tony, right? But from the BOI perspective, what other tools do you have that SMEs can participate in, especially around education and awareness?
Oh, fantastic. I did mention, I think the team that put this together, the business development team, the BDSP sit with them. That's a network of over 400 consultants around the country who help handhold these SMEs to bring them to a place where their projects are bankable. We also have in our corporate finance division, we have the advisory team. We also do the same thing, but maybe just on a larger scale. But we also help SMEs, companies to also raise capital. So like I had mentioned, in terms of collaboration, we have financing partners who are also looking to invest. And because we are on that deal, we are also able to draw in more capital there. So these are things that they can also leverage. I know a lot of people don't know about the advisory function because that just started like about a year ago, but that's very available. So then we also are partnering with AfroExim and other institutions for a product called the JPPF, is the Joint Project Preparatory Facility. So what we also see is that a lot of clients struggle to get money for pre-operational expenses. So things like feasibility studies, FEED and DED designs, research documents. So we also have that facility where we are able to give you money to be able to make your project bankable, do all the things that are necessary to make your project bankable. And that facility is now being offset when we now raise money for you. So I think these three things are part of the things that we also do to be able to help SMEs scale, become more structured, to be able to have access to financing.
All right, thank you, Mr. Chike. So on a final note, before I ask founders to ask questions from the panelists, I'll ask Mr. Sam, right? We've talked about Growth Board, there's ASEM, there's also the Technology Board. In summary, I know you cannot summarize this because there are different industries, different players. In summary, what are the eligibility criteria that SMEs and founders need to meet to participate in the capital market?
Okay, so I think that we need to separate the micro from SMEs. So if you're here and you're still micro, maybe dealing with a balance sheet size of about maybe 5 million, 10 million, 20 million, 100, what? I think that this conversation around listing, you're not quite there yet. So when we talk about medium, more medium than small, That's when you now start talking about listing for starters. And you see, I think he made some valid points when he was speaking about issues around governance and all of that. So my recommendation is that even when you are micro, please start doing the right things till you become small, till you become medium. So my wife runs a catering business, and sometimes I overhear her conversation. Somebody wants to pay for something and she says, don't pay to this bank, pay to this bank. And I always ask, the bank you're paying to, in whose name is that? Sometimes, you know, entrepreneurs do this thing of not separating the business from the person. You tell the person that this bank is not working, pay to this bank. When you open that bank account, it's the person's name. You are making it difficult for anybody to give you a facility, because the one you paid into your personal account will not reflect in your company account. And when they're going to do a DD on you, they will look at your company account. And some people don't unlearn. You even find medium-scale companies doing the same thing and not just putting the proper structure and doing the right thing. So if you have a long-term view of building a company that you're subsequently going to come to Tony & Co. and list on the exchange, you might as well start doing the right things. You need to have a proper board. You need to have proper governance. You need to keep proper books of accounts. You need to have
Good afternoon. My name is Emeka Egochukwu. Apart from owning a business, I also have some generational family businesses that I run as well. I want to know, there was a general consensus when you mentioned, sir, that if you have micro or small, maybe listing is not time yet, and everybody kind of nodded, and it went over my head because I would like to know why that decision, why that concession.
Okay, we can have response. Mr. Chike.
Okay, for the JPPF, I think maybe we can discuss after here, but we would just require the project scope and then the documents that you need or the feasibility studies that you want to carry out, and then we now start our due diligence process. But it really doesn't take much time. Yeah.
All right, Mr. Sam.
Okay, so what I was trying to say is that if you look at when Tony was presenting, he had a slide, and I hope that Tony will share his slides. He had a slide where he talked about the criteria to qualify to be listed. So there is the growth board. And I think the growth board, you have two, the entry and the standard, right? I believe the entry level, you require to have a market cap of 50 million. 50 to 500. Minimum is 50 million for you to get on that entry board. So if your market capitalization, what is market? Just the valuation of the business. The value of the business is not to 50 million. You don't even qualify to get on that group board. So you're not yet ready. That's one of the things. Then, of course, you go from there to the standard, then you go from there to the main board, then you go to the premium board. All of these boards have certain disclosure requirements, have certain capitalization requirements, have free float requirements. That is the number of shares of the company that everybody and anybody can buy. So, for instance, from the entry board, you need to have 10% free float. But by the time you get to the main board, you need 25% free float, right? So a company who's not there yet, there are things you need to do to get ready to get there. There are companies here who need to be talking to BOI, and he has done a good job in speaking to that. There are companies who need to be talking to venture capital companies you're just starting off. Okay, so you need a venture seed type investment. There are companies who need to be talking to PE type investors. That lad is here. He's one of, he looks very calm and gentle, but seated right here is one of the biggest PE firms in the country, right? In Africa. Yeah. Thanks for the correction. I didn't say that. So he's here, that lady from Verod. There's a stage you get to when you start talking to him. I mean, if you're looking for 500 million to scale your business, I'm not sure they would open their doors to you, right? You're not there, quite there yet, right? So it's about stages of business growth. When you get there, then there are companies that are ready for listing on an exchange. Because this is NGX, I'll keep on talking about NGX, but permit me, MD, to mention that NGX is not the only exchange, but I don't know the other exchanges for now. I only know NGX right here, right? Yeah. But, you know, so are you ready for the other exchange? Are you ready for NGX? So that's again why you need professional advice on some of these things. Even when you go to the exchange to list, they'll still direct you. I don't know, BOI does something like that, where they have a list of advisors who help companies. Same thing with NGX. There are companies that are registered with the SEC, like Ancora Advisory Limited. I'm not advertising, but I'm advertising. And other companies who can help you know when you're ready. I hope that now didn't get over your head, sir. Thank you.
All right, thank you very much. Can we just clap for our panelists once more as we take a seat? On the final notes, I'll just reiterate what Mr. Tony mentioned. SMEs are quite important for our nation. They contribute 45% or above 45% to our GDP, employing about 70% of our workforce population. And therefore, it means that all of the information, the data we've gotten from here, from this workshop, to our village meetings. We need to carry that information to our village meetings. We need to carry that to our churches, our mosques, to say that, okay, you know what, we want our economy to grow, because if they grow, our economy will grow and our lives will be better. Thank you very much.
Thank you very much. Please remain standing as we take a group photograph with the panelists. May I please also invite Mr. Juchiemeka to join them, and representative of the CEO of BOI. All right, thank you very much. Please, a round of applause for our experts in doing justice to the panel session. All right. Very quickly, we're wrapping up, winding down. This would be the last session for today, and we'll be having a quick fireside chat on private equity perspective on pricing, valuation, and exits, unlocking growth and addressing bottlenecks for a more active exchange. And for this panel session, we will be having Mr. Danladi Veyen, the managing partner, Verot Capital Management. Please, a round of applause for him as he joins us on stage. Mr. Danladi, please. Thank you very much. And to be joining him on stage is Mr. Akimboboye Akinola, as a partner from Deloitte. Please put your hands together for them. Now, this session promises to be quick. In the next 15 minutes, we will be wrapping up this event. Thank you very much.
All right, does your mic work? Testing. Yes. All right, great. All right, so I think I'll start with the first question, which is to Danladi, everything to Danladi. Then I think after all, we will now send it back to the audience to ask their questions. So the first question is this. Now, what are the unique challenges? I know we've talked about that a lot, but also I'm adding opportunities in deploying private capital to SMEs as compared to the big corporates.
Okay. So first of all, thank you for inviting me to this session. It's really been a real pleasure and an honor to be here with you all today. So thank you. I've learned a lot as I've been sitting down here. I know this is the last session between you and freedom, so I'll try and be very brief with my answers. The questions about sort of what are the challenges and the opportunities investing in SMEs versus larger corporates. I think we've spoken a lot about the challenges already, right? So maybe not so required to dwell into that, but I mean, three main things. One is just governance. We've spoken about that quite a bit. The second is just accounts, right? And having an auditable history that we can follow. And then the third is just a potential, a desire or lack of desire perhaps to have partners in the business. Because once in private equity, you're really, really partners in your business once we come in, right? The analogy I like to think about is like if you're getting money from a bank, it's sort of if you have a car, you're driving to a certain destination, you need fuel, right? Money is that fuel. Money is a commodity. You can get money from anywhere. But with a bank, you have a certain amount of fixed payments that you have to pay along the journey. It's very clear when you have to pay money along the journey for the fuel that you put inside your car that bank has provided for you. With private equity, we're really partners in your business. So we give you the fuel into your car, and basically we sit down in the car with you, and we help sort of, when we can't drive the car, we can't fix the car, the founder is the expert, the management team, they're the experts, they know how to get to the destination. But from private equity, we share in the spoils at the end of the destination. If the company does well when it gets to its destination, we have a piece of it. If it doesn't do well, we don't have a piece of it. So for me, that's the big difference. And so the challenge with investing in SMEs is just investing in companies that have slightly less governance, maybe less clarity on succession. We don't have ability to audit the businesses as well because of financial accounts. But therein also lies the opportunity, right? Because these are smaller companies, more nimble, usually have much faster growth. They're usually able to scale a lot faster, a lot quicker. We are able to bring in a bit more sort of institutional experience to help these companies grow. We have many examples of companies we've invested in that have grown significantly, right? Because we're bringing in, I think Chidi spoke from BOI about some of the assistance that are provided to businesses, where you're helping them out with, either strategy or opening doors for them, so business development. You're helping to streamline procurement. You're helping with install ERP systems. There are just quite a few things that we're able to do with businesses to help them grow really fast. And I can give you a few examples of things we've done, but maybe I'll save that till later.
So what is clear is this, there's a lot of opportunities, and so one of the opportunities that you bring experience to bear, and so the company partakes of that. And at the end of the day, you're not a loan giver, you're equity, so you share part of the spoils at the end of at the point of exit. So for most companies, I think it's for them to see this is really pure play, patience capital, and you bring in a lot to bear. Now, we were all here during the COVID-19, and we saw a lot of business failing, a lot of SMEs failing, and a lot of them also did survive. And that changed their mindset in terms of valuation. So putting that at the back of your mind, the question now is, how do you see valuation expectation, or how do you bridge it? The valuation expectation of founders or investors, especially post-pandemic. How has this evolved in your experience?
So that's probably the key challenge when we're investing in businesses, just this valuation gap, right, and gap in expectations. And I think things have changed a lot over the last few years. A few years ago, I think valuation levels were much higher. Everybody had much higher expectations of what the businesses were worth, and investors were also pouring in money a lot quicker into transactions. A lot of investors ended up losing money, not always because of issues with the founder and management teams, but also just the economy. The economy has been really challenged, like all of us have experienced, and therefore investors have not made the same returns they'd like to make. More recently, valuation levels seems to have come down, I'd say closer to earth, right? And there's a lot more of alignment. I think people are now a lot more focused on real unit economics, on financial viability, on long-term sustainability. And so we've seen that gap decrease. But there's still a gap, and I think that gap is natural. As an entrepreneur, by definition, you are very, very optimistic, right? If you're not optimistic, you would not be an entrepreneur. Yeah. An entrepreneur really believes they can conquer the world, and that's I think that's fantastic. That's what makes it so interesting, right? You're a real optimist at heart. You're not a pessimist. The pessimist doesn't leave the house. The pessimist believes the sky is going to fall tomorrow. Entrepreneur believes they'll be the next Dangote, right? And we like to back entrepreneurs like that. As a result, and also as a result of all the work that you've put in, you have a very high expectation of value of this business, right? And that's just natural. Analogy someone gave to me is that an entrepreneur says, if everything goes right, this is how big my business can become. As an investor, when I come into a business, I say, if everything goes wrong, how do I make sure I don't lose money? So fundamentally, we have a different, there's a gap there, right? Different ways of bridging that gap. Probably the best way is to use an advisor, I think, and we've heard a number of advisors speak already. An advisor helps an entrepreneur sort of articulate that vision and put it down on paper in a realistic manner. An advisor can help an entrepreneur better say, hey, look, I don't think you can triple your revenues in a year, right? Maybe we should bring it down a little bit. An advisor can help an entrepreneur get data on how other businesses have been valued and therefore give an entrepreneur a sense of what that value might be. From our perspective as an investor, what we try and do to bridge those gaps is not try and put in straight equity all the time. With equity, I have to value a business today. I have to say it's worth 100, right? In 5 years, it may be worth 50, in which case I've lost money, or it may be worth 1,000, in which case the entrepreneur is upset, right? Feeling they've given away too much value. So a way to bridge that is, one is by putting in, say, a convertible loan, right? A convertible loan means that it's loaned today, and then we see how the business does, and then it converts into equity in the future. So hopefully that bridges a gap, right? A second way that we also invest is, say, we'll say, okay, look, let's just say it is 100 today, right? If in 5 years when I'm trying to exit your business, it's worth 50, I'll need you to make up some of that 50. Maybe take me closer to the, maybe take me even back to 100 where I was at the beginning. But on the other hand, what I'll do is I'll also cap my upside. So if my 100 become 1,000 5 years from now, why don't you take half of that, right? So I'll really only leave at 500. So there are different structures you can use to sort of mitigate or close the gap between a very, very high expectation, positive expectation, with potential downsides. The other thing is also when we're investing as equity is to put in money in tranches, right? Based on either milestones or hitting certain targets, which again just helps to mitigate this risk and balance out optimism with some level of pessimism. Or some caution, I should say, not necessarily pessimism. If we're pessimistic, also we would not be investing. So it's more caution.
Excellent. I mean, there's a bit about when you mentioned that as an investor, I don't want to lose so much money if this thing goes so bad. And as a founder, I don't want to give out so much money if the thing goes so well. So I think that balance is very critical. Now, I do a lot of M&As in Deloitte, and I've seen a lot of exits of PE houses to other PE houses, secondary exits. But IPO is one of the options, but it's quite rare in Nigeria. So the $1 million, I think, which is why we are all here, is, I mean, from your own experience, what do you see as the core bottleneck of PE houses exiting via IPO?
Hey, so thank you. It's a fantastic question, and it's one that I spend a lot of time thinking about, right? Because one of the concerns in the private equity industry from investors in private equity is that we're recycling their capital. So investors in my fund are also investors in other funds. My fund takes a business, sells it to the next fund. That fund sells it back to us in the future. We're basically recycling the same capital, right? And so the capital markets, if that could be an exit source, would be really, really good for our sector, and will free up a lot more capital to invest in a lot more businesses. I'd say, one of the challenges, maybe the key challenge, there are a number of challenges, but probably the key challenge is probably liquidity, right? I'll say the second challenge could be valuation levels. The first challenge in terms of liquidity is that private equity, when I exit a business, I want to return that capital back to my investors as quickly as possible. If I exit today, I would have to hold on to my shares for a year or two, I believe, as we've shown, as a sponsor of a business. So that may need to change to attract more, to allow PEs to invest, to exit directly. Because today, if I list, I can't sell my shares immediately, right? Even if I could, there's not a lot of liquidity, not sufficient liquidity yet. And I think maybe different measures need to be taken to still try and enhance the liquidity levels, which I know are being taken, but that just needs to continue on a bit more, right? And then in terms of valuations, it's something I need to look at, but if we look at some valuation levels in some spaces, sometimes perhaps it's an issue of liquidity, supply, demand. Sometimes you'll see that private transactions occur at higher multiples than publicly traded comps. And again, that's just another thing to look into. But I'll say, perhaps India might be a good market. I'm sure MD, we studied India. Might be a very good market to look into. Because India has done a phenomenal job of just growing the markets and getting SMEs to list. As I was looking at some stats just before this, 500 SMEs have listed in India. Wow. 200 of those have gone from the SME board to the growth board, right? So that's just been fantastic. But, it's sort of, you have a product, but then also the customers are retail investors that have grown significantly as well. And so I think both go hand in hand, right? So having more issuers, but then also having more investors out there. And again, so in India, what they've done is they've provided tax incentives for retail investors to invest. So trading has gone from 15% retail to over 65% retail, right? Encourage pension funds to invest in equities, and just basically done a lot of things to ensure that there's a lot more investors coming into the markets. If that happens here, I think you'd see a lot more IPOs quickly. Even in the tech board, I think in India has over 100 tech companies on the tech board. Again, so maybe here we have to focus on 1 or 2 or 3 examples where you're really subsidizing capacity building, really helping out with governance, with sort of market awareness, right? Doing everything possible, making sure those first few IPOs are extremely successful, and then that will, open up the channels for a lot more to list.
Yeah,
and also PEs to sell.
I think this is a good avenue for PEFCA to collaborate with NGX to soften this. To champion the advocacy to make sure these policies are in place. Because they are quite nuanced. Because I, as an SME, coming to the board or selling some of my stake on the stock exchange and having some floats is different from, and having to hold it for a year. It's different from a PE house. You're not a person, it's a fund. So I think all those nuanced advocacy needs to be put in place. So I have 2 more questions, but in the interest of time, I will just cap it to 1, then I'll throw it to the audience. And this is about the future outlook, really. It's saying, looking forward now, what innovations, be it structural, regulatory, or financial, could radically change or transform how SMEs access private capital?
So I think it's a great question. I think we spoke about a few of those if we just look at the example I gave from India, right? Which is a lot of things just to encourage more retail investors to come into the market, a lot of things to maybe even help SMEs. I think the growth board is doing just that, making it a lot easier for them to list, easing some of the compliance regulations, and probably allowing companies to comply as they grow on the board. So I think that's extremely helpful. But one other thing that I think could be very helpful is actually to use more PE firms and more VC firms as kind of intermediaries. We've spoken a lot about sort of the compliance regulations, the governance regulations before you list. A lot of those things, they're very challenging to actually do. It's, you come up with a brilliant idea as an entrepreneur, you build a business. Governance, and I completely understand that governance is not the first thing you're thinking about. Right? You're not thinking about setting up a big board. You're not thinking about, ERP systems. You're not thinking about a number of these things, right? You're very busy building your business. PE can be that bridge between sort of being the entrepreneur and getting to be a lot more institutional, and so that you can go public easier, right? So that's one thing I'd really encourage, because we come into the businesses and we do just that. It's like we say, okay, look, it's more about, it's not really only where the business is where's the mindset of the entrepreneur. So we have gone into family-owned businesses that, quote unquote, did not have a lot of governance, but the entrepreneur really wanted to build, right, a world-class institution, right, and realize that would cost more money, right? That may, reduce margins a little bit, but the benefits to having a very well-governed institution will be a lot better, right? So PE can be that bridge between sort of where your business is and eventually taking it public. But back to, one last point to your original question is one of the additional reforms I think would be very helpful is trying to unlock pension fund money to invest more in SMEs and to invest more in the markets, right? So any regulations that could come about, I think the pension fund manages on the order of 25 trillion naira today. 1% of that is 250 billion naira. That's a lot of capital that could, go into SMEs, help them grow, and as we've all learned and we all know, SMEs are the engine of growth for the economy.
Absolutely, and they do contribute about 45% to the GDP, so it's important we pay attention to that. I think I'll throw it now to the audience if there are any specific questions for Danladi or for the PE space specifically, and we can take that as we go. We have one hand at the back.
Okay, we'll take just one question, please. Okay. Get back to you now.
You also have one at the back.
Okay, thank you. It's been very enlightening. Just a thought. Compliance is the issue for a lot of the small businesses. But as PE funds, do you want to consider financing compliance? There was a story about the restaurant that sells quite a lot, right? They're not interested in getting to compliance, all right? But if you take this as this is a business that we can just finance the cost of compliance, and when they successfully list on the exchange, we can share the booty. I mean, it sounds like a product that can help grow to that 500 that you're talking about. Thank you.
Take it. Yeah, I think you should take it. Okay, let's take the second question then. So we'll take it on. There was a hand at the back. Yes, that's the hand.
Okay, thank you very much, Mr. Danladi, and thank you for this program. Entrepreneur, starting a small dry cleaning business. We've run for like 20 years. And if you're telling me here that you're ready to stoop so low, I want to ask, how low can you get to? Because a lot of us, we really need that hand-holding. We need that support. Most of us got into business through passion, drive, or maybe survival. But to take it to that next level, some of us never had that great opportunity to have worked in a very structured organization. But I hear you say something that Verod can do something. I would really want to take that after this, sir. Thank you very much, sir.
Okay, thank you. Thank you. So let me address both questions, and thank you very much. In terms of financing compliance, so what we typically do is, we can't come in and just simply finance compliance as a product. We're equity investors. So what we can do is invest in a business, right? And the entrepreneur may come to us, and that business, the capital they're seeking is for growth, right? Maybe new machinery, break into a new market, come up with a new product, right? So we'll allocate that capital for that, but we'll invest a little bit more that goes into compliance, which maybe goes into paying for board members, goes into internal auditor, goes into an ERP system, right? So that's how we do it, and we have an equity stake in that business. And again, that's why I said it really depends on sort of the mindset of the entrepreneur. We may not necessarily be at the full compliance levels today, which is fine, but if they are completely committed to getting to where we need to get to, then, we're very happy to be partners. In terms of advancing businesses and depending on the scale that they are, let me give one example, because I think it's usually best to have an illustration. iFitness gyms. Some of you may know iFitness gyms, right? The entrepreneur, fantastic entrepreneur who's founded iFitness gyms, I think he had about 4 gyms when he decided he wanted to bring in PE into his business to really roll out massively, right, across the country. The entrepreneur's background had been I think he did some work in telco before that, so had never really run fitness centers, came across this opportunity, built up 4 gyms, and wanted to scale up quite a bit. He sold more than 50% of his business. So again, just to help folks who sometimes may or may not want to give up control. You don't necessarily have to give up control. But in this case, this entrepreneur really was visionary, I think. Knew where he wanted to get to. He sold close to 70% of his business to a private equity firm that gave him fuel to invest, right? 4 years later, he had 20 gyms, right? And this number 2 player in Nigeria, I think, has 3 or 4 gyms today. So he has 20 gyms. We came in and we purchased a stake from the private equity firm, which is, again, going back to one PE firm buying from another PE firm. Mm-hmm. We're his partners now. In less than a year, we're at 26 gyms. We want to take it to 50 gyms. right? Which would then be the largest across West Africa, and maybe the largest in Africa. The largest gym chain is in South Africa, and confidentially, it's not confidential. Confidentially, they may come and buy us, right, at some point in time. But again, it's just showing sort of the potential growth of this gym, and if it is not sold to the largest gym chain in Africa, it could be a perfect candidate to be listed on the exchange, right? Good brand, very sticky customer base, 30,000 customers now that come in. They come into the gyms, and we just continue to roll out and expand, looking at taking the gym chain across not just Nigeria now, looking at going to Ghana, looking at going to Ivory Coast. Again, so we can take a business that's sort of any size, as long as we're really aligned with an entrepreneur and help them scale and grow their business. But bringing in governance is a really important part of that process.
Right. Thank you very much, Danladi, and I think that is a wrap on our side. Thank you for paying attention.
Thank you so much, Mr. Thank you, Mr. Danladi, Managing Partner, Verod Capital Management, and Mr. Akin Boboye Akinola, Partner, Deloitte. So we're going to take some photographs very quickly while we wrap up with the last session with our Executive Director, Mr. Oluwatoyin Edu. Thank you. Once again. So we're wrapping up. Thank you, everyone. We have event reflections from BOI leadership, and this is going to be taken by our Executive Director, Risk Management and Business Development, Bank of Industry, in person of Mr. Oluwatoyin Edu. Let's make welcome our Executive Director. Thank you, sir.
Wow. Thank you. It's been a long day, but an interesting one. It is not every day that you have BOI, NGX, LCCI, MAN, PwC, fund providers as represented by Virod, investment lawyers, financial advisor, and Korea, PE, venture capitalist, founder, BDSP membership. As a matter of fact, for BOI and NGX, management at the highest level. I think this event deserves a very warm round of applause. And you will all agree with me that with what we've seen here today, I think we can do this on a much larger scale. And the reason is very simple. I cast my mind back to events of this type that I've really attended, but whether within or outside the country, whether at AFREXIM level, whether at, just mention it, you will, when you realize the quality of what we have put out here today, you will then realize that, wow, we need to really get it out there. First and foremost, for the BOI story. The BOI story is quite compelling. We are for impact and sustainability. And if you are listening to the president's speech on June 12th, the June 12th commemorative speech of the president, you will then realize that BOI is indeed, I think I made a small note somewhere, just quoting the president verbatim now. He said, BOI will play a very significant role in transforming Nigeria, the Nigeria industrial landscape, and help in reducing corruption. So, transforming the Nigeria industrial landscape. We all need everybody here to help us achieve that. And you will wonder, was the president, what was he thinking? Why will he link, how does BOI want to help reduce corruption? With all that we have said here, one thing is certain. BOI is on both sides of the spectrum. What spectrum are we talking about? Supply and demand side of fund. to both MS. In fact, everybody, once you are and you have anything to do with industry or engineering, industrial growth in Nigeria, BOI is home for you. That pipeline, the specialty within which we can take the fund and disburse it transparently. So if you come into BOI, whether it's a state government intervention, whether it's our global partners from across the sea, whether it's even in Nigeria, whether it's even a BOI fund itself, you can always come into BOI and have a place to tell yourself that this is a place, one, you'll get the transparency and be able to deliver on the effectiveness of that catalyzing the industrial growth of the country. So much has been said. We've been a long day for us. I don't want to keep us for too long. We heard everybody from the divisional head of business development itself. We're all partners together. Our doors are open. We do not have limits. Whether you are Dangote or you are the laundry demand that has the job that talked about dry cleaning business, we're open for you. Thank you very much. And I appreciate all your presence here and the inputs that have been made by everyone. Thank you.
Thank you very much, Mr. Oluwatoyin. All right, thank you very much, Mr. Oluwatoyin Edu. I must say it's been an insightful and engaging session today. Has this engagement, so has this workshop been worth your while? Yes or yes? I didn't hear it here. Yes or yes? Very well. A round of applause for yourselves as well. All right, now to have a closing remarks, please make welcome with me Ms. Ivie Dima Okojie, a team lead, Primary Markets, NGX.
Okay. Good evening, distinguished ladies and gentlemen. Oh, it's afternoon, sorry. It's been a long day. Okay, so recognizing that our time has been fast spent, but well spent, I will go right into beginning to close the session for today. So on behalf of the Nigerian Exchange, we want to say a special thank you to the management of Bank of Industry and the execution team in putting this together for your partnership and commitment to bringing this to fruition. Then to our speakers and our guests, thank you for your time. To our speakers, thank you for lending your voice to this initiative. It's been a very insightful one, and it's important that as we move forward, we begin to take actionable steps to develop these markets. Then to our colleagues at the NGX, particularly the Primary Market Department and the Corporate Communication Department, thank you for working tirelessly to ensure this session is a success. The SMEs in the room, thank you for being here with us. We want you to leave here today inspired and determined to begin your journey towards formalization and long-term growth. I want to quickly address something that was mentioned by the entrepreneur. Micro companies, you are not left out. We have offerings at the NGX through our capacity building initiatives, and take advantage of these to accelerate your readiness into the public market. On that note, I would want to leave by paraphrasing what was said in one of the earlier presentations. Less talk and more action. And that is what we are here for at the NGX. Thank you very much.
And on that note, distinguished ladies and gentlemen, it's been a pleasure moderating the session alongside Gloria from BOI. My name is Ayomide Oguntoye from NGX. It's been a pleasure engaging with everyone here today. I hope we'll take the learnings from today's engagement and put them into practice, and we hope to see SMEs scaling and also living to sustainable points. Thank you very much.
Thank you, everyone. As she said, we're very excited that everybody here, we're all very engaging. You know, we hope to see you in more exciting sessions like this. Once again, I'm Gloria Usman. I'm with the Legal Division, Bank of Industry. Thank you so much.